Hi friends. Seems that Streamlabs decided to just crash on me there, so my stream stopped rather abruptly without me actually knowing it had. How unfortunate, when everything was going along so smoothly. So I'm not entirely sure quite how much of the technical analysis for the old GME that you caught there, but never fear, I'll just kind of rewind what I was saying and go through a few things again and then catch up to where I was before, and we'll continue on with the show. Also, I've no idea why the chat box wasn't working, so let's see if it's working now. Hi, great, excellent. I can see that Always Learning is in there and it is working. Drop me a like if you wouldn't mind. Let's see how many people we can get on this live stream today. See if we can introduce a few more friendly faces to the Rocky Outcrop community, the best trading technical analysis community that I am aware of in the world, and I have looked into it. And we're definitely the best. So, shout out from Dale in Wales. That's it, Dale Francis. Thank you so much for giving me a shout out. And I'll give you a shout out right back again. Thank you. I hope everybody in Wales is doing well and you're looking forward to getting those lockdown restrictions removed a wee bit. I know you've had to deal with a lot of stress recently, so I'm hoping that that gets good for you very soon. Already have, don't worry, we have a good amount of people here. Fantastic. We had a good amount of people before. Fantastic. Creole dropping the fire. Lovely to see you. Swisher V Baby, Sup Rocky, excellent. Everybody in a great mood, fantastic to see it. I'm super pleased. Well, let's see if we can take up more or less where we left off. Now, I've been informed that what you heard me talk about last was dry gunpowder. Maybe let me know in the chat if all of these arrows, as I explained individual facets of the technical analysis, are familiar with you. Have you seen them? Did I get through that part or not? Did I get through that part? Nice to see you, Navanethan. Good to have you all here. Good to have you all with me right now. I'll just try and pick up from where I was before now, just as a little explainer to people who are joining us for the first time here today. My name's Rocky Outcrop, and I'm an experienced technical analyst here and a trader by profession. Now, what I'd like to say is that I am here to help bring you right up to that next level. You know, the level which you don't actually see on YouTube, but you're aware exists in the world somewhere, where people can look at the charts and really understand what's going on in a fantastic way that you think to yourself, do the people on YouTube really know that much? Do they really know it? Well, I've decided to take the time and the effort to help bring you up to that level. I'm 100% confident that there's no one on YouTube or on any blog or news article website in the world who does technical analysis quite as well as I do. Okay, sounds big-headed. Please give me an opportunity to demonstrate some of that to you. Okay, thank you so much for joining me. Really do appreciate it. Divorce Court, D-I-V-O-R-C-E. Nice to have you here, my friend. Good to see you for the first time. Great name. That's the 5-0 just flying by outside. Let me know that they're taking nice, good care of me. Okay. So, thank you everybody for joining me. Really, really do appreciate it. If you join here and you hit the like button, then it helps everybody else in YouTube land know that this is the place to be. I would love it if we could see a good number here today. And hopefully the stream keeps working and Streamlabs doesn't crash on me. Okay? This here should be quite helpful for you. Now, I don't know again, I don't know when I got cut off. And I'm not sure how much was explained before. If anybody that was watching along, had I made it through the MACD? Had I explained anything on the DMI over here? Had I explained anything on the stochastics, etc.? Let me know where I'd got to, if you can, and that's as far. If I've not gone back far enough, I'll try and catch up with it. Okay, but I'm going to just start off by bringing up the charts full screen and giving a quick summary for anybody who is just joining us and hasn't seen any of it so far. Prices went up. When they went up very, very fast. Parabolic, if you will. Caught a lot of people off guard. Prices then were manipulated back down the way in an inorganic movement. Nevertheless, it complies nicely with the rules that we're experienced with in technical analysis. Prices came down to this key area right here. Then they closed, I believe, for the weekend. Opened back up again. Or else it was just overnight. Who knows? I can't remember right now. What was the date there? 1st of February? Suppose I could work it out by looking at the old calendar. Yeah, so over this weekend, open back up again, down at this area right here. This yellow line is a 236 Fibonacci retracement point. When the prices went past that, it caught a lot of the algorithmic traders and co-opted them into the inorganic movement towards the downside. Also savvy traders who wanted to keep that gunpowder dry, cutting off their trade at the 200 or indeed the 150 area with a view to perhaps getting back in at one of the lower areas below. The implication for where the prices could go to was, at this point, 80% likely to go either at least as far as $66 and quite likely to go as far as $35 thereafter, down towards the Dow 50% retracement area. I think I just started to mention stochastics. Okay, thank you, Cyan. Thank you so much. Down to this 50% area. Now, what we actually see is that the prices never made it as far as that. Instead, where they found support was at this red serrated line here, where we actually see the prices came up and were resisted by numerous times in the past. A couple of times operated as support, but as well, if we go back, we can see this is the weekly time frame I'm bringing up just now. So in terms of the weekly, it's been a big chunk of time here, big chunk of time right at this point. Also resistance here, support, resistance, support again, and that's where the prices managed to actually find the liquidity and the desire to re-enter. Now, whether or not it was retail that did it at that point, or just savvy investors, professionals working from home, or indeed hedge funds themselves, is not for us to know. It is not for us to question why. It is for us to do and die, as the old soldier saying goes. So we just accept that. That's where they went to, and we found the support so far, putting us in a position where we could potentially see a turnaround in price. I think I explained the volume in the previous episode as well quite well. However, you can see that the volume has been diminishing throughout the most recent period in time. In the over the last period of the last 20 days or so, if you look back over the period of the last month, we've been decreasing in volume as this has been going down the way, indicating to us that there's less transactions actually changing hand. So what that means is that the price is changing by a big amount here, much bigger amounts than it actually was changing in those periods where we had large volume candles, for instance. Lots of big volume candles in at around about the last time we were at the 40s up to 50s zone. Much smaller candles over here bringing us down further. That is, of course, because there are buyers and sellers willing to buy and sell at that certain price. Now, I saw a video actually as well on YouTube yesterday, which tried to explain, and it was endorsed by somebody else as well. I saw a video which was being replayed by somebody else watching the video, trying to explain why the prices dropped down by saying that hedge funds had so much of shares to sell that they listed them at a certain price and others bought it at that price. And it was the most rudimentary and inaccurate explanation I've ever seen, and it was strange to see it endorsed by somebody else. Prices can change regardless of the amount of volume that's being traded on them. All it takes is for one fraction of a contract. If you're talking about fractional share basis, let's just talk about it in terms of one share. All it takes is for one share to be bought or sold for the price to change. That's it. okay? And the prices don't just flip to where the order book has a big stack of them on there. No. Prices need to be traded there to get there. But what you can see is that the volume, of course, is much, much lower than it was previously. And at this point here, we are seeing a little uptake in the volume over the last couple of days. Okay, looking at this here and seeing that 12th of February. Now, we are actually waiting for this to open it up again. The last trading on this was on the 12th of February. You can see the markets are closed. It's a holiday. It's President's Day. Happy President. Happy President's Day. Hope he got everything he wanted for his President's Day. You can imagine Joe Biden under the president's tree in the morning, opening up his president's presents, taking out that red race car that he's been hoping for so much, and saying, gee guys, thanks so much. This is exactly what I wanted for President's Day. And happy President's Day indeed. I'm very happy for good old Joe there. Anyway, let's continue on with the show. Bringing up the oscillators down below. And I see my computer's running a bit slow here, so hope. Come on. Yeah, good, we've not crashed. Excellent. And by the way, thanks to everybody for keeping the chat flowing, dropping those likes and letting everybody else on YouTube know that they're in the right place for getting prepared for their trading on everything tomorrow. We're going to be moving on and looking at stocks and shares as well. Stocks and shares? Crypto technical analysis here in the markets, which never stop as well in a moment. Anyway, on the stochastics here, bringing this up, ideal outcome would be for us to see this crossover and move towards the top side. Going back and just giving everybody who's unfamiliar with this particular oscillator a quick look, activity like this is less usual, really, than activity like this. Okay? What we're hoping to see here is for the prices to move towards the top side and for the oscillators here, the stochastics, to change. The indication that you would get from this is a couple of things. One, we can see that there is indeed a lower low over here, and this is in fact something which is called hidden bullish divergence. Now, I like to refer to this as continuation divergence. I think the name hidden bullish divergence is a misnomer. However, the taxonomy in trading was invented by people with a without much imagination. It repeats itself an awful lot, and rather than thinking of a different name for this, they just decided to say that this was hidden, even though it's just as visible as anything which is visible divergence. It doesn't make any sense. Anyway, hidden bullish divergence, continuation divergence, bullish divergence could go towards the top side. What we're seeing here is a low, lower than our previous lows, while on the price action, we didn't actually go lower, comparing where we've come here to where we were before. We needed to go all the way down as far as the 50% line. Now, we can see this again here on the MACD. What does that mean in terms of the lay person who isn't really familiar with technical analysis? How can I explain this to you in a way you might understand? Well, this is the prices going down, okay? This is going down, but we're in an overall upward trend. We have actually been, by the way, in an upward trend on AMC since all the way back here in April, right? We've been in an upward trend. It's very distinct and obvious upward trend, okay? And this is all part of the same thing. You can say it's part of the same thing in some senses by virtue of the fact that we haven't even taken out our previous inflection point in the market here. This is just simply a higher low so far. Indeed, it would be a higher low, and all the way until we came down as far as $17. Although currently, I don't expect the prices to go down as low as that. If we do see the prices turn around and go out towards the top side and confirm this as a local low, then you would say that this is hidden bullish divergence, right? Forget that it's hidden. Just be aware that I'm telling you that it's on there. That's enough for now. But how does it work? What does it mean? Well, here we can see on this particular oscillator and this oscillator and this oscillator. This is the RSI that I'm pointing at just now. This is the MACD and this is the stochastics. We can see that they came lower than they had done previously, although the price action didn't come lower than it had done previously. So if you were to think about this from the point of view of somebody who was a free diver, okay? Diving towards the bottom of the sea, trying to pick up gems off the sea floor. They drop their gems in there, and they know that the gem that they're trying to swim down to capture is at this point here. That's where the bottom of the sea floor is. And to get it, they're going to have to swim down as far as that, or maybe even further, to get their hands on it. They take a big deep breath in, fill their lungs right up with as much as they possibly can, and then swim down and down and down. As you can see here, swam all the way down. But did we manage to capture the gem? No, we didn't. In fact, we didn't get anywhere near it. We could see it at the bottom of we could see it. It was right there, you know. If we had have been able to swim on just a bit more, then we would have done it, and it would have been fantastic. However, despite all this effort, which when we look at it is more effort than we put into any dive that we've ever done in the entire history of this thing. We've never dived down as far as we ever have ever before. Significant, right? We tried our cotton socks off. But we didn't get there. Then we have to come back up, take another breath, and consider to ourselves, will we try this again? Well, while there is always a chance, absolutely, that we will try it again, it's fair to say that we've used up an awful lot of that strength and that momentum that we had available to us in our attempt to get there already. You can imagine if you were that person trying to do that free dive, how unhappy you would be about the prospect of having to try again to push past that point. You can imagine that, right? Well, that's hidden bullish divergence. It's a good sign for anybody who's thinking that maybe we'll just leave the diamond there or the gem and continue up at the surface of the water instead of trying again. It's a pretty good sign for that, okay? That's called hidden bullish divergence. I think that's a decent enough way of understanding it. Now, we can see here on the RSI that there is hidden bullish divergence on all of these lows recently. Not just this most recent one, but compared to the previous one, and the previous one, and the previous one, blah blah blah. That all of these lows, going back to April, like I say, the uptrend started in April. Going back to April, all of the lows that have come in. No, sorry. Speaking too slowly here, getting a bit confused. All of those here, I've not managed to take out the previous low, right? In terms of price action, and well, okay, this is convergent. It's not hidden bullish divergence, but you can see here that we've tried and tried and tried and tried and tried, and it's forming a line, a trend line. Yeah, I really regret sticking with that hidden bullish divergence chat when I'm looking at the RSI. It is on the Stochastics and it is on the MACD, and I'll show you that again in a second. But I had a little faux pas there from me. That didn't actually happen in the previous episode, which, you know, I was unaware when I got cut off. Whatever. This is not the greatest TA in the world. Oh no, this is just a tribute. Ha, only kidding. This is the greatest. Okay. By the way, Veli Caraman, I will be looking at Tezos during this episode. No worries about that. Just not rushing around to it. Getting some of this old traditional stock stuff out of the way first, giving everybody in traditional land a bit of the TA which they've been missing out on. They've never had anything anywhere near as good as any of this. It's not explained. By all means, go out there and take a look at stuff. I watched a video yesterday where somebody was saying that they were an expert. Far more of a TA guy, really, than anything else. And what they would do to do the TA is go onto one of these websites that's just got a really rubbish chart on it and look at the chart and say, one sentence about how it's gone down a bit, and that they think that they're technical, and they maybe mention support or something like that. Maybe. Anyway, it's not real TA. It wouldn't cut it. You wouldn't get hired anywhere to do TA if that was it. You wouldn't even get hired. Never mind would you'd keep your job. If you had your job, you'd be fired. How about that? So anyway, not good. But look, so we can see this upward slope. We don't want to break this, right? That's essentially what we don't want to do. However, if we did break this, then you'd have that hidden bullish divergence until such times as the prices actually manage to push past their previous lows. Okay, so what you're looking at is the prices would need to go lower than 35 if the RSI were to drop down past the 40 point. That'll do for an explanation on that one. And then here on the stochastics, as you can see, we have the hidden bullish divergence with this low, much lower than the previous low, and we're just primed for potential cross here. Could be very, very good. If it moves towards the top side and we go in for, and coming up towards the neutral line, we could see a degree of inflection as we've seen in the past. However, if we manage to actually find our feet and continue to move towards the top side, even just with a target of the neutral line, the middle point of the stochastics, then in terms of price action, what you're looking at is for us to be able to move up to, first off, this area right here at around about 65. But then, in fact, your next target towards the top side is in around about $144. The way that you would then think about this is if you were getting in around about now, and I, for the life of me, don't know why the red area of that tool is automatically so big. There's no reason, no need for that. Come on, TradingView, sort it out, guys. Anyhow, the way that you would manage this type of concept, perhaps, now I'm not a financial advisor, and none of this constitutes financial advice. Don't take it as tax information, financial investment information, anything, and always do your own research, of course. As you know, you've watched YouTube before, you know the rules. Way that you would handle this, perhaps, if I were to be thinking about it, this is how I would think about it, would be along the lines of going for a 5-to-1 risk to reward ratio on this one. So if you're just getting it around about the current prices, then what you'd be saying to yourself is that I wouldn't want to see the prices drop down lower than 48 before I would be happy to relinquish that position, because the next target thereafter would of course be 45, where you could get your next entry and have another 5-to-1 risk to reward. However, it's all about, in terms of this, looking at this, it's all about this potential for the reward. And coming up here, you get an easy 5-to-1 just to move up towards the next zone at 65. Now, if you actually take up towards certain areas, like for instance, this little point just here, you're already looking at a 16.8-to-1. But if you go on up towards the next area afterwards, 35-to-1, it's crazy. What does this constitute in terms of potential profit and loss and volatility and risk and reward and everything else? Well, more potential on this than there has been in the entire history of this chart. Bearing in mind as well that this is on logarithmic, and what we're looking at here is bigger percentage moves than we've ever had, ever, in the history of GME. Ever. So, oops, just undo that. I'll continue to show you this. You know, for I don't know how long you would want to see me showing you this, but in terms of any of this risk reward, much bigger than we've ever had before. So just as a sort of little shout out to you, it's easy to manage your risk in this zone. Very easy looking at these key levels. And the reward for doing it appropriately is very big. What would we like to see to know that we're actually making the right decision then at that point, and we've got in on a good trade? What would we like to know? Or indeed, for all of you diamond hand monsters out there that decided not to take advantage of the opportunity cost of just simply closing your trade at $150 and buying 3 times as much at the current rates, and you've still held onto your positions based on this notion of diamond hands. And fair play, I respect that. I respect your tenacity. A lot of respect for that tenacity. However, there is a better way of being, and you've stumbled across this channel now. Be sure to hit that subscribe button so it's added to your favorites, and you get this sort of information all the time, elevating you from, you know, up to the hero levels of trading. What you'd like to see here would be for a cross to occur between this purple line and the green line. The green line is the positive DM. Purple line is the negative DM, DM minus. This is the DMI. It's the most useful and least understood indicator in the entire arena of trading. It is highly respected amongst professional traders, vastly understood by your average retailer, and I myself have only seen one person, that's right, one other person on YouTube who understands this thing so far. Actually, it's two now, because TradeSpawn, my good friend, has started a YouTube channel. Nice one. Shout out to TradeSpawn. Check out his channel. Fantastic information if you're interested in GME right now. The only other one I'd recommend in terms of GME stocks is TradeSpawn. Great channel. Check him out. TradeSpotting. Anyhow, other than that guy, only one other person understands this thing on YouTube. Anyway, this is DMI. What we want to see is a crossover. Now, what we have seen is the ADX line of this going towards the downside throughout the entire period at which we have had the negative price action. This was a cross on the DM, positive and negative, whilst the ADX was positioned up above 25 on here, 25 being a key area for the ADX line. And it's just been going down, but it remains above 30 here, as I drew in an arrow earlier on. If we see a cross here in the next wee while, this will be a beautiful, wonderful signal to say that the strength here, which this ADX represents the strength, is in a position to actually increase rapidly in the direction of the positive trend. If it crosses, this is how you know if your trade turns out to be a good one. Now, indeed, whenever you bought at this price, when the prices were around about here, and then didn't sell, this cross over here was a good indication to you that you perhaps should have. Bringing up the price action and pointing out that the 9th of February was the prices were up here. And well, whatever, you could have got out at various price points, you know, 30% higher than they are now, for example, and then got back in again for a better thing. Now that's done, that's in the past, that's gone. What we're looking for is what's going to happen in the future. A crossover here, very, very good for us. If this happens, that'll give you a confirmation that your trade is the right one, and then the chances again of us coming back down and trying to reach for that gem, that diamond at the bottom of the sea floor in the face of this hidden bullish divergence is extremely unlikely at that point. Now, of course, it is possible, but it just becomes a case of likelihood and thinking in probabilities, as if you are wanting to trade in the zone, you are recommended to do so. That's a good thing to have in your corner. Just checking in with what they're saying in the chat here. Does the fundamental regarding short interest and short squeeze give any weight onto the chart? Yes. It's an interesting metric to look to. Does it give weight onto the chart? Yes, it does. Nevertheless, in terms of actually determining your entry, your exit, the risk that you're taking whenever you enter a trade, no, it doesn't. When people spend half their video talking about things like the short interest, etc., what they're talking about is the potential for things to go flying incredibly, to go flying away off and to catch a lot of people out. Now, no, it doesn't really impact on things, not massively. And I'll perhaps just jump over real quick to the Bitcoin chart to show you how this can happen in a far faster mode. Now, in terms of Bitcoin, the information you get out there about this sort of stuff is all false as well, just like in the way that it's false on the in traditional worlds, because there's always the option to lie and manipulate that data. Anyway, looking over here at Bitcoin, we can see that in today's price action that we saw a drop down in price in this candle here. In fact, from yesterday down to the lows that we had of around about 8%, okay? Significant stuff, more than enough to completely wipe out anybody who's trading in with, say, 10x, for instance. If you can imagine something like an 8% move happening on a forex pair, then there would be worldwide headlines about it, right? So it's a big move to have happened. Now, this happened here and it pushed the prices down. Now, we saw this, what we saw here. In fact, maybe it would be better to show you this on the link chart, since I've already got a drawing on here to kind of demonstrate what this looks like in the grand scheme of things. If I just bring this up, is that depending on how you've drawn in this wedge, on this particular chart I had it drawn in like this, what happened to do was cause a retest of this pattern, and the technicals will give you this information about where your risk and reward is, regardless of the method in which you use to get there. Now, as we can see here, this is formed into a great big wick. Now, if you'd have shown me the data with regards to the distribution of shorts and longs, and then the potential for volatility, etc., I might have been able to say to you, well, hey, maybe if we do what we can see here as being a technical risk and a very real possibility of coming back down and retesting this zone, maybe if we do this and then find a recovery, it'll actually result in a great big wick being on the chart, yada yada yada. Now, do you really care what it looks like at the end of the day? Because that's what that discussion really is about, because it's talking about money flow and it's talking about the potential for stop hunts and everything like that. And then in terms of how that actually translates onto a chart for you, it might end up looking something like that. Now, as well, that's not the only chart that I have drawn out for this thing, because there's a couple of different ways of looking at that just there. And if I bring up this chart, you can see that actually, you know, you could have said, well, maybe instead of it just being a retest of the wedge, we might actually come all the way down and test the lower end, if you like, the demand line of this overall pattern, right? Maybe that's how it would have influenced you. Now, from a theoretical basis, it's information, and from a utility basis, of course, you know, about how you could employ that information, it is useful. It's interesting, and of course, it justifies having got into a position and as a way to make moves which could be far greater risk and reward for you, and as well to then revert back to the GME charts. And I'll be moving on to talk about crypto soon. Just going to do AMC, I think, first, probably. To go back to the GME charts, all this information has really told us is that there was greater potential here for a move up the way and then subsequently down the way in terms of the willingness for prices to move in the face of diminished volume and price action, in the face of reduced transactions on the exchanges, making comparisons to previous points in time where we actually saw bigger volume candles, certainly bigger ones than we're seeing right now, with far smaller movements in terms of price, because of course there's less chance of somebody being caught out of position. So there is greater potential, for instance, and then that was good. But when was this information that people are talking about useful? Well, it was useful back over here and stuff like that, as a way of saying, now if we do go towards the top side, it could be at some points explosive, etc. And then we've seen as well that there's the inverse of that relationship, showing you that it takes like less transactional value in order to push it back down the way. So in terms of real on the ground utility, it's not exceptionally useful. However, it's good to know, and it can inform you. Rocky, you are recording these right so I can watch them over another 10 times to understand. Lol, that's a question, I guess. I'm going to make this into little clips, but they will be available on the YouTube channel, and absolutely you can watch them back as many times as you like. I hope I help. I hope I help at least bring a little bit of clarity to you with regards to trading. So what would be my conclusions then, therefore, with the GME chart? Well, based on the oscillators down below, we are in a position where we're primed. We're primed to start to see the trend go up. The counterintuitive point from looking at these is that we could actually see more of the same, but what we need to see happen, if we want to see what shorters need to see happen, is first off to take out these price areas over here. So you're talking $35 is the first thing you need to really take out. Of course, you could find support in here at 45. Oh, as you can see, that is where the 50% is. I don't know why I said it didn't come down as far as 50%. I guess it must be between the recordings. Whatever. It's all good. We're totally all good here. We came as far as the 50%. Fantastic. Happy Dow days to everybody. Yeah, happy Dow days to everybody. But you know, we would need to come down as far and take out the 35 area and push onto the 618 afterwards. You'd have to do that in order for this to get, you know, I guess that's a bit of a moot point. I'm saying the prices would need to go low, but if you're talking about whether or not the prices will come down to the likes of, you know, $13 etc. again, then you need to push on before we go up the way, okay, before this becomes a local low. Right, so in terms of needing to do it, what we need to do if you're looking to short this, if you want to talk about it from that point of view, is before we get anywhere near the price point of say 78, we need to go to 35 if you're looking to short this long term. That's what you need to happen, right? So from the point of view of somebody who's long in it and looking to manage their risks, you know, so long as we stay above that, we're doing very well. But moreover, we've come in here for very, very, very important key areas for us. I think this changed slightly when I moved it. I think what happened is I moved this, didn't I? This is what happened. I moved it. That's why I'm confusing myself. I moved it by accident, and in my undos I didn't put it back in the right place. That's why the 50% is off. There we go. And 50% actually lines up closer. Let me just get this right. Yeah, 35 is where the 50% is. Perfect, right on that last area. Yeah, fantastic. There we go. Everything's back in alignment again. Right, so you would need to go back down towards this. You need to go down towards the 50% Fibonacci retracement and actually hit this and take it and probably, you know, take it out. At the very least, you would need to see the prices come down and at least get a candle that comes down to $35 at least for you to be able to say that this is maybe not a positive looking chart. Okay, that's where we stand right now. Now, how you manage your own risk and choose to enter and deploy your trading in amongst these zones is going to boil down to your own strategy, tactics, and appetite for risk and reward, of course. And I'm going to leave those decisions with you. But that's my conclusion to be drawn from this here. In the face of volume which diminished during the period at which the prices were declined, I'm going to say that this is inorganic, that this has been manipulated. Then I'm going to say that as well here we've managed to come down to a key area which was previous resistance and support, very, very significant over a long period of time, and we didn't break it again. We've also managed to put in hidden bullish divergence, and the ADX is still positioned in such a way where we can recapture the upward strength of trend very, very nicely. Scrolling back into the past, it's actually been since over here in July, and then June and July was the last times that we saw any degree of the ADX, the strength of trend, diminishing. And overall in this period, as it happens, we didn't take out our previous lows in this area. We did have a low that came down here in April. That was the start of the bull run in terms of GME, and then since then we haven't really taken out any of these lows. This here of course was diminishing price action, but the low to be looking to of course was down there at that lower than $3, $2.50 area, and we didn't do it. And then since then we've had the strength of trend in place, and it's very much possible for that to continue on the way. All you can really talk about is possibilities and risk. There isn't any predicting the future, but in terms of any TA that you're likely to have anywhere on the internet right now, especially for free, but including every single source which is paid for, you're not going to find anything better than this, ladies and gentlemen. You just aren't, okay? Right? You just aren't. Now, if anybody has any specific questions that they'd like me to answer, I'm more than happy to do so, and I will circle back around to do them again. But that's my conclusions right now with regards to GME. The risk to reward on this one is better, well, the risk to reward over here was better than it's ever been. It might be as good as that and could supersede it, especially if we see a VW type affair. However, it remains better than it's ever been for its entire life on this stock right now. That's the general conception on this one, until such times as we've taken out $35. If we actually come down to $35 and then retrace up the way, then it becomes 50-50. By the way, I want to say to everybody, thank you so much for joining me. Those of you who choose to hit the like button and help share this out the way to the rest of the world are very much appreciated. If anybody actually does do that, to the likes of Twitter, etc. Very, very much appreciated. And I hope that you appreciate as well, not appreciate, you know, in terms of like, oh, thank you, but in terms of being able to internalize and accept and onboard this information. I hope you appreciate the information that we're doing from the point of view of the traditional markets. Now I'm going to do this one for AMC. Spent a great deal less time looking at this one than I did with the GME stock there. However, there's good reason for that, and you'll notice as I stretch this out the way, there's good reason for that. It's because you've now been educated quite well with regards to a quick analysis of these stocks. If I were to point out where this low came in at, you'd probably think to yourself, hey, it didn't really take out this previous area over here, while the MACD came lower. Nice. You'll also say to yourself, hey, when we look at the RSI, this has got this upward sloping line on it, and we haven't taken it out yet either. Decent. You'll also think to yourself, there's other things that are worth noting. One is how the moving average here is above the current price. Sure, and it's red because on my customized RSI, this is much better. If you want to get access to this, dead easy, over there at gumroad.com/rocky.outcrop, you can download the text files and add them to your own trading view very, very easily. This here is sloping down the way. That's not so great. We have come below the neutral line on this one. That's not so great. But we're also aware of that this is as much as they could possibly push it down. And that's all they managed to achieve. And we put in this potential for this hidden bullish divergence. Now this will become confirmed once we take out the $7 area. At the minute, there's risk. But when you're buying and selling risk, which is your job, put an R in that job, don't know why. This is your job as a trader, is the buying and selling of risk, not the buying and selling of the underlying asset. You're actually only ever concerned with the risk associated with that asset, and that is, of course, where you determine your reward. That happens, you know, to be in around about $7 is where that risk area is. Now, of course, if you're looking for confirmation on this one, I want to carry it on up the way. Taking out $7 is going to give you nice confirmation on that. The likes of people who've actually, you know, averaged out their trade, and there's a guy I watched recently on YouTube who's got in and his average price is above $8 and he's happy with that. The reason why he's happy with that is because if it comes back to his break even, there's a good chance of it going on the way. He doesn't need to sit there and think to himself, oh, I'm going to have to close at break even, I'm going to have to take my money out at break even, I hope it gets back there. Instead he's thinking, I hope it gets back there, because if it does, then my position suddenly becomes a good one. So if you're looking to get a confirmed trade, you know, waiting for that confirmation, then that's a decent enough price point for you to be looking at, $7.75, where you could then draw out, of course, your risk to reward and say to yourself, well, I want to carry this trade on up the way towards that area, and I'm not willing to lose any more than a sort of 5-to-1 risk to reward here. And that's dead simple then. You'd be looking at something along these sorts of lines after. But where you are right now, of course, is in that higher risk, higher reward section, where you've got two potential targets, of course, initially up at that $7 area, which of course is a 50% increase up towards $8, 50% increase from where we are right now. Very, 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 very good. Better than really anybody ever looks for in terms of a trade. But then, of course, as well, what you have is the potential to go up towards $12 thereafter, fill in this gap, and you're still sat in the region of really low risk, relatively low risk trading, thanks to the increase in volatility that we've seen during this period over here. That's the same thing as the GME chart, ties together fairly nicely. But what's different to the GME chart is this. We have a cross here. That's what, we don't have a cross, sorry. We have the rejection of a cross. It looked like we had a cross. Looked like we were coming in for a cross right there with this the ADX going down and crossing over the two DM lines, the DM positive, DM negative. So the DM positive was coming down here, the DM negative was coming up here. It looked like they were lining up for a cross, possibly here on the 9th of February, and they didn't. At the same time, we put in that divergence. The strength of trend has diminished. Sure, it has. We see it's below 25, however it remains above 20. So we're actually really prime position again to get this to go up and continue on with the upward strength and momentum. That's where you want to be right now if you're looking for a low risk to reward trade. Now what you do also have to bear in mind is a couple of little things. You might get on a stop hunt that drops us down towards filling in this gap officially. Now we've done kind of a pretty close to filling it in effort here, and let's call it good enough in terms of this one. It was mere pennies away from it. So we can say that in terms of the psychology behind it, that it's mostly being accounted for. Nevertheless, it's still actually there and very much a real possibility. That would actually offer up your best potential buy for you in at around about the $5 mark, $5 and 15, 16, 17, 18 cents. That would be the best buy area for you in the next near future, with a less than 10% move coming in to take you to that zone. Nevertheless, you could even be trading this from where we are right now. If we do take out that zone and move down the way, that's a different story. There isn't actually even a gap here really worth talking about. Again, you could make the case for it. There is a very small gap here of, what do you call it, 385 down to 375. So you're talking, you know, a few percent, a couple of percent, some pennies in there at 10 pence, 10 cents to get you to go down that move. So, you know, it is still there. That would be your next real worry for you. I wouldn't hold on to trades past that point. That would be, of course, my Alamo for them in terms of the recent movement. But we're right there positioned nicely to get that cross. Likewise with the stochastics, and looking at this one, you can see, of course, you don't want this to happen, but we could move up. Now, we don't have hidden bullish divergence on the stochastics here like we did on GME. Don't have that here. Okay, we do have it on the MACD. The stochastics is not the most reliable of divergence indicators, but there is something to be said for how this is an overall oscillating market. And in terms of the upside, therefore, in these last highs, did we have visible divergence? Visible divergence is stronger, if you like, than the hidden stuff. What's the difference? Well, for people who want a wee quick lesson, visible divergence is when you look with the direction of the trend at the highs and the lows, right? At the highs, if it's up, or at the lows, if it's a downtrend, with the direction of trend. So if its trend is up, you look at the highs. If the trend is down, you look at the lows. That makes it visible. The hidden stuff is you look in the direction of the trend and you're looking at the lows in the uptrend. Why they call it hidden and visible is beyond me, but there you go. And in terms of this here, we're seeing that it's convergent with the highs with regards to our previous highs. However, let's also see that this market isn't strongly trending like GME has been since last April. It hasn't got a 10-month long bull trend on the go. It doesn't. Why? Well, it's, you know, more affected by the world pandemic than other things are. However, this makes it ripe for looking at the stochastics, which is better in an oscillating market. And we can see that we're just in line for potentially for a turnaround at a point where, you know, we'd be coming in with hidden bullish divergence on the MACD, and then we could rise towards the top side thereafter that. We also have the cross here. Whoops. We also have the cross here on the no sure thing. Not ideal. Not ideal. Obviously, this is as big as it's ever been in the history of what we have here since 2014. So, you know, this is talking about markets which could potentially be explosive, really, if we're to see this turn around and go towards the top side. And we know that anyway, because in terms of percentage moves, you know, you're talking about 250% move to get up towards the tops of where we are recently. That's going to really do for the AMC technical analysis, you know, because more or less you can draw all of your conclusions from what we said about the GME stuff. It actually helps you with the AMC stuff, because what we're talking about here is principles of technical analysis and applying them to charts, and of course there's overlap there. Nevertheless, just to conclude, your best buy point on this would be if we were to come down and fill in that gap down there at about $5.16. Now, that's not actually necessarily going to have to happen. We've done enough in terms of the recovery towards the top side in these two green candles to say that maybe that's a little bit foolhardy to look to. Nevertheless, it is a possibility. If we're looking up the way though, in terms of risk to reward, then we've got a huge chunks of risk to reward, and it actually does cover off the ability, you have the ability to actually account for this gap fill and at the same time look at a decent risk to reward ratio. And if you're taking this up towards the top side, then it's way beyond 5-1. Depends on your own particular appetite for risk and reward, etc., of course, and how your own strategies are with regards to trading it, but there's potential here based on the hidden bullish divergence for us to get a nice turnaround. Likewise, when we saw here that it took this much volume to push the prices up and significantly less volume to bring the prices back down again here as well, it doesn't take the big volume to make it happen. It just takes a couple of contracts being traded at a couple of different prices, one contract, one issue of that stock, and you have changed the entire market cap of the whole stock price. The whole basis of every individual stock is changed, not by having had to have sold or bought a commensurate amount of them on the markets, but simply one transaction is enough to change the entire value of a stock, and that is all it takes. And they didn't actually manage to push it down past their significant key areas. They resulted in putting in hidden bullish divergence. If we see rises towards the top side, therefore, if you want to wait and be confirmed and actually cut out all of the risk to focus as much as you possibly can on reward, then the best entries for you are going to come in around about the $7.50 area. If we can take that out, $7.75, regardless if you're about the risk and reward here, which I suspect you probably are, then there's plenty to be had, which is good stuff. Now, I'm not a financial advisor, none of this is financial advice. What we also wanted to take a look at today was a cannabis stock called Tilray. If you want to have the ticker for it, is TLRY. It's traded on NASDAQ because, of course, cannabis is another form of technology. Lols. And this is a nice clean chart. So what we can do is take the principles of what we discussed in the previous two stocks and apply them to this one and see what we're looking at. By the way, Tony, fantastic to see you here. Cool. I was supposed to be doing a live chat today, but Rocky's live came on, so we're here instead. Sorry, Tony. Hate to steal the thunder. It's fantastic to have you here. And in fact, if any of you want to, you can maybe even join me on the live stream. How about that? We could bring on audio from other people if they want to get involved. Anyway, here we are, all happy families, everybody having a good time. Let's see if we can take some of the lessons that we just applied in the other charts and put them on here. And this is going to be good for people who want to look at the likes of Fibonacci retracements. But maybe before we do that, I should show you the Fibonacci idea here that we have on the go with AMC just real quick, just so you can see just from in terms of the low, which is in there, and the high, and how far we've come down. Well, we pushed past the 50%. We haven't managed to make it down as far as the 618, coming down as far as this big risky area, obviously for us. That would be the ideal under normal circumstances point to get in at for a long. If you're looking for the continuation of this towards the top side, that would be ideal. But you know, we have to wait and see. I'm talking about managing your risk. If you were to be and reward, I would say that you'd probably have stopped out in that. If it did come down to these prices, it'd probably be wise. Now, I'm not a financial advisor, none of this financial advice, and that's exaggerated in terms of the movement, but it would be, if the prices come down the way here, then what you'd be looking to is trying to get back in when they've turned around, as opposed to catching a knife. Okay, but anyway, let's go and take a look at Tilray and do the full TA on that one. That combines the knowledge that we learned in the previous episodes, jumping up to the weekly chart and drawing in this from the highs to the low, a Fibonacci retracement coming in here. I'm going to just use the magnet tool to help me for this one, because I don't want to have to try too hard to find our points specifically. So that was useful, and we can see here that the highs that we've got so far and where we saw the turnaround at was indeed at the 618. There we go, the 618. And just to then put that previous bit of chat into context, jumping down to the 4 hour time frame, that if you're looking to short this, just like I said on AMC, if you're looking to long it from the 618, the wise thing to do would be to wait for it to come back through it again. As you can see here, that this is precisely how this functioned in at the 618 in terms of the highs. Does this signal to me that we've got a fantastic opportunity for a long right now? No, not necessarily. What it signals to me is that the profit taken from the fantastic opportunity for a long has occurred in this area, and what we're looking for now is to try and get in on a trend. Let's take a look at how we actually got up here. Can there be anything to be learned from this structure that we're in right now, and is it maybe worth taking a look at this, at the most recent rise up from the lows here in terms of Fibonacci as well, to put things into context in terms of where we come from so far with our pullback? Well, maybe. So let's just do it real quick, since it doesn't take any real effort at all. Down past the 236, of course, come down to 382, haven't taken that out quite yet. That would probably offer up your decentest buy area for you. That's the all-time highs to the all-time low Fibonacci retracement. And of course then, if we were looking to beat our all-time highs and go up to big profit targets, you could be looking up as high as, you know, $6,000 really is your target on this one if we manage to make it on up the way. But the next target really beyond the 618, which is the current target again, is up at $106. We're at $37 on average over this entire course. That's your average price of the stock since it was introduced in, you know, this entire lifetime on the Nasdaq. The average price that anybody has paid for it is $37.50, and if we look at the price right now where we are, is $29. So we're actually still in a position where you could say that we're below the average price. And not only are we below the average price, we're below the average price in terms of percentage. We're below the average price by nearly 20 to 25% below the average price, you know. So there's opportunity here just simply in terms of a reversion to the mean on this one, but we have already reverted to that mean and come back down the way. That was all from the weekly time frame. As you can see, the volume was picking up there, and that was good to see. Let's take a look at the highs. Now we can see this is the discussion then in terms of the divergences, etc. What we're looking at is these highs. We can see that there's a high here, a high here, and a high here. Okay, we've got those three highs to look at in this overall upward trending move. So when you're looking in the direction of the trend and you're looking at the highs, what you're looking at then is classic visible divergence, and that is of course the warning divergence, the stuff that tells you there could be a bit of a pull back. Bringing the MACD on the screen here, you can see very much getting these higher highs on the go. Nice, that's what you want. They can also do this same analysis on the RSI, and in fact this is probably one of the better ones to do it on, although it's debatable which one is more accurate for you. But you can see here that of course we've managed to take it out, and it's not even, you know, it's actually looked like it could be a close deal, but it wasn't with that most recent push up towards the 618. So in many senses we came up towards the 618 here, and we did it to take away the chance of there being bearish divergence. At this point here, looking back the way, looking back the way here to when the prices were coming up at this point here in the past, when prices came up and they were putting in this high, which is higher than the previous highs, we can see that the RSI was of course lower than it had been in the past. We can see that the MACD was of course lower than it had been in the past, and at that point you're saying, oh dear, this could be some of that visible warning reversal divergence for us. We would need to see something happen here to prevent it. So what you'd have said then is we need to see the prices go up towards the 618 at the least, really probably, to be able to burn off this divergence. And not only did it exist on the RSI, it's here on the DMI and the Stochastics at this stage, and indeed the no sure thing indicator too. Okay, so then what actually ended up happening is precisely that, and then we've seen a pullback since, and we've managed to come in here and find support at the next Fibonacci level down and around about our previous highs as well. Fantastic, perfectly positioned in terms of trend following to continue trending this towards the top side. That's pretty good. Okay, so like I said there, now we're in a position where we want to see if we can follow a trend, and so far things are looking pretty good. What happens then if we see the prices go up? Well, let me bring the price action up full screen again, and then introduce that concept of hidden divergence. Is there any of that on the go? So just like the visible stuff, this is just as visible. Let's call this continuation divergence rather than hidden divergence, because in terms of the biggest difference between them, it isn't that one is visible and one is hidden. That's not the difference. The difference is that visible, so-called visible divergence, which is when you're looking in the direction of the trend at the peaks if it's an uptrend, or the troughs if it's a low trend, what you're looking for is warning signs that maybe you get a reversal. We don't have those at the minute in terms of this trend. When you're looking at the lows in an uptrend for the so-called hidden divergence, what you're looking for is continuation. And it's like that analogy that I made of the free diver trying to swim down at the bottom of the sea to pick up a diamond, and then of course thinking, oh, I used up all the energy I had and my lungs were filled to capacity and I couldn't make it any lower. They don't feel totally inspired to give it a second shot thereafter, right? That's what we're looking for. So we have this upward trend just here where we're finding lows coming in that are higher than our previous lows, bringing up the oscillators down below. What can we see here now? What is this compared to this low? Okay, what is that in the MACD? What is this compared to our previous low? What is that? Okay, need I go on? I don't think so. We have hidden bullish divergence or continuation divergence. That's very, very good. Score 2 for the trend followers. In terms of the DMI, now we've already looked at this in terms of divergences for the upside. How about we see, is there any hidden divergence on this one? Now, when it comes to divergence to do with the negative aspect of things, it is hidden on the DMI more than it is on any other oscillator, adding to that complication. But what we can see here is that the negative strength, the DM negative, came higher at this point than it had in the past. So we're saying if this negative strength here is 25, and then this next low in the price, so the negative strength coming up as high as 28, okay, then it's fair to say that while the negative momentum tried as hard as it could, the lungs were filled up with as much air and it swam as low as it could, it didn't manage to take out its previous lows. Therefore, what we're seeing is convergence on the top side and the visible side, and we're seeing divergence on the low side on the DMI. That's another one in the favor of the bulls. Bringing up the DMI yet again and looking at this, well, couple of little things. We did go below this point here, which is 40, and that's a very, very strong area to have broken below in terms of the DMI. Score 1 for the bears, perhaps in that sense mitigated somewhat by the fact that we'd actually come up here as high as the as high as 75, but up above the 60 line on the DMI. Now, it's actually fairly rare for that to happen. As you can see here, this is the last time it happened, and scrolling on back the way, this is the other time it happened, and this was a negative sense. Bringing up the charts here and showing you that this was, of course, the bottom of the price action, and indeed the start of the upward bull trend. Then over here you can see that there was a peak in the price action here, and of course this was the start of something fairly decent in terms of really not finding that we were able to push on any lower. So from a structural point of view, after this point here, when we came up above 50, we didn't take out our previous lows. What we're seeing here is we've come up to a very big high, and the reason we did that in some senses from a technical point of view was to avoid the bearish divergence. We needed to see the prices come up to here to avoid that, and they successfully did so. Thereafter, not taking out the previous lows, and indeed coming in with hidden divergence. Bringing up the MACD here, you can see that there was indeed hidden divergence when that happened last time too. So lovely stuff. What we're seeing is a repeat of the same thing again. Score 3 perhaps in favor of the bulls. On average, a net positive perhaps in terms of how this looks. Indeed, just as the most basic sense of this, we're seeing that we have the positive placed above the negative, not crossed, above 30, which is good, perhaps below 40, which is of course natural, following on from where we've seen in terms of the real highs previously coming in. What does that mean? That means we have managed to reset the oscillators somewhat and given us a good chance to burn off any potential for divergences towards the downside. Then we've seen the ADX sure sloping down the way, but where it's positioned right now is unarguably in a real position of strength, having come in here with a high followed by a higher high with lows that are also trending up the way. This looks good, ladies and gentlemen. In terms of the stochastics, we're seeing something which we saw on the other charts, just a little bit ahead of where that was. We're coming in at this point and we're asking, will we get a low which is coming out and taking out both of the previous lows? But we're also getting the bullish divergence here, the hidden bullish divergence, continuation divergence between our previous two lows. Very good. Score again in the favor of the bulls. Now we've come into the oversold territory, so perhaps in a real ultra basic sort of trading 101 point of view, this is where we can expect to find a potential for a turnaround and to say that the retrace is complete. Of course, this is looking like it could go on down a bit. You can see the distinct difference in placement between the two lines that form the stochastics over here. Incidentally, on my stochastics, I like to use an exponential moving average, and that is, of course, you've got the green line here, which is the main line of the stochastics. Then you've got the exponential, this average moving average line, which operates as like a signal for the cross, and I like to use the exponential. Now if I just pop on the simple moving average, you can see more or less the same place as well, so it's all good, it's all gravy, everything looking okay. Big difference between them though, could see a little bit of pain in the meantime, but I don't want to see us taking out these previous lows. It would be nice if we could see a turnaround there. Now if we did see a turnaround there, then of course the average will catch up with where this was and give us a tasty cross, and it could look quite explosive at the time. Now again as well, what we're seeing here is that we don't have divergence between the highs on the no sure thing indicator, and the last time there was a cross it was back over here and it's going towards the top side ever since. Now if we do get a cross, it's going to be a cross in a high position, so I'd be wary, and at this stage then it becomes important to consider risk management, because we're not talking about some explosive trade based off the back of trying to exploit people who are underwater in shorts and then rely on that, leading to increased potential of volatility, and then thereafter do the charting to then see where things could go. To answer that question again from always learning earlier on, what we're looking at here is more of a trending type scenario, in which case let's try and think about this in a sensible way as well. Coming in from the last real significant lows before the top side, it's probably fair to say that that is in this price point over here at 428, dragging in this Fibonacci retracement tool up to the highs. You can see that we did indeed take out the 236 here, and that's offered us up our resistance today, bringing this one in here, drawing it white so you can see it a little bit easier. I'll also stop extending the lines to the left. We don't need them extended out that direction. Okay, so we're below the 236 on this Fibonacci, but we've not made it down to the 382, and we're finding it operating as resistance for us. Perhaps what we want to see happen here is for the prices to then, of course, take this out for our confirmed entry on a trade, and this offers up that distinct zone of where your risk and reward is, like we spoke about with the AMC charts, with your equivalent of the 775 trade entry point on AMC coming in here in terms of Tilray at that 36 zone, which of course is saying to yourself that we're now above the average price it's ever been, giving you double confirmation on a trending move perhaps towards the top side thereafter. In terms of, however, the whether or not we can continue to trade this towards the top side, let's bear in mind the movements beyond the 236 in terms of the bigger time frames. As you can see here, we're not trading today, and the movement here, which took us below the 236, happened after we came down and closed yesterday at 30, not yesterday, but Friday or whatever, at 32. And in terms of a percentage move, there was very little for you to do in terms of getting out, but you could have, it moved 11% down for the subsequent days open, or 10% down for the open, and then it came back up and gave you the opportunity to get out if you liked to manage your risk appropriately, if you're willing to be savvy and snappy with your investment at 25% higher up on a retest of that 236. Now we're in a position where we've come back down again and the prices are at 28. So there was plenty of risk management to be had here, but it takes you to be nimble. In terms of if you were to then just cancel out a trade in the future, if it was already in a good deal of profit and you were simply looking to try and avoid further capitulation towards the downside, this sort of strategy of looking at this price point is probably somewhat useful for you, but that isn't the only way of managing it, and given the confusion that's in here, it's probably worth drawing in some other lines. You have something, for instance, like the, you could look at this in terms of the 4-hour time frame, looking at the Hull moving average. If we manage to actually, cross over this one, maybe that's something. Not so super looking just in terms of the initial start. How about looking at this in terms of the Ichimoku cloud? And then of course this is telling you that unless you take out your actual significant lows, this inflection point here, not really at the meantime counting for anything. In the future it will, but just now not so much. Maybe you'd be managing your risk that way. And of course as well, you can look towards your lagging line as well for taking that out. If we move up and then down again, perhaps that's how you'd want to manage your risk. There are numerous different options, but those are a little bit more complicated. Perhaps instead what we could talk about is simply managing your risk by using a series of moving averages. As we're looking at this trend towards the top side, taking all the drawings off here and saying a couple of things at once. As you can see, if we were to cross down below all of these moving averages, that would be a very big sign for you. But also if we were to see crosses of the moving averages themselves, stretching this price action out, so you can see that while the yellow line is happy enough to cross over the green line from time to time, those are actually just kind of mostly been operating in terms of false signals for us. Really, when it crosses the green. However, if the yellow line, the shortest period moving average I have here, and this is done on the atomic number scale, if you're familiar with nuclear physics, which I'm sure all of you are, and of course quantum physics and the small stuff, then these numbers of 8, 18, 36, 54 will be no surprise to you, because they are of course the numbers of the atomic weights of the key areas for covalent bonds to happen between atomic structures. Okay, but anyway, that's just a bit of a joke. But anyway, those are good numbers to be using, fair enough. If we see the 8-period moving exponential moving average actually manage to successfully cross over and we get a reversal of all of these moving averages, maybe at that time, if you're in a decent trending move, is when you could take profit, and that might be one of the earliest signals you get beyond looking at market structure, price structure itself. Okay, that's my conclusion with regards to the Tilray stock. I hope that was useful, and I did try and put in a good deal of effort. We've been at this for quite a while already, and hopefully that's something to be enjoyed by people. Thank you so much, by the way, to TradeSpotting for hitting like, and for anybody else who hits like out there. Let me just double check I am still streaming and everything. Yep, still streaming, everything going well. Been at this an hour and 15 minutes. Let me just check in with the chit chat here and see. Now we only have 17 concurrent viewers according to my screen, 19 perhaps, I don't know, something around about 20. Pretty disappointing numbers, to be perfectly honest with you. I'm really quite disappointed after that. Well, what you tell me what it is that's led to that happening. I've seen other things in the past get a lot more. Is it purely because I'm talking about on my thumbnail I've got the Bitcoin logo rather than something else, or is it because it's President's Day? I wonder. But also, let's talk about here the ratio of quality information to, of course, audience numbers. Am I doing okay here? Am I giving everybody the best that they could hope for? I think that in terms of, you know, it's not a one-on-one technical analysis session, but I'm all ears. You've got opportunities to talk to me here, and it's all good as well. Awesome stuff, Rocky Outcrop. Some great stuff there for everybody of every level. Thank you for that, TradeSpot. Tony Wright says, don't get emotional and chase a candle that has moved really fast. Just take your time and apply the TA you're learning here. Great tip for everybody. Alex says that he is entering a trade on the third touch point of a trend line on the 1 hour chart. Oh, he's asking, is entering a trade on the third touch point of a trend line on the 1 hour chart a bad or good idea? Should trend lines be drawn across greater timelines to validate? Well, let's just discuss this topic in a bit more detail for people who are not aware of it. Now, in the Technical Analysis 101 series that I'll be putting out eventually for people whenever I get round to doing it on Patreon, by the way, and if you want to support the channel, I'll just put a little link in here. Patreon.com/rocky.outcrop. And by the way, to everybody who wants to know, just as you can see here, we've got really, you know, what, 17 viewers right now, and I'm pretty confident that there isn't any better technical analysis that's being done on these stocks, which are traded by hundreds of thousands of people every day. So a big disconnect between the interest in these things and the viewership numbers. Big disconnect. Fair enough. If you want to see this type of quality continue, you're going to have to pay it forward, right? Because I'll not keep doing this into 2022 if I don't make it to the point where the Patreon is actually got to $7,500 per month. Okay, bit scary numbers perhaps, you know, but if you want me to continue putting out this information, I highly recommend that you take a look at that Patreon, of course. Otherwise this will just simply disappear. And bearing in mind that every single person who watches these episodes makes far more money off of any individual trade after having watched one of my episodes than the other eyes would have. They've got better confidence, they know what they're doing, they know a lot more. Then it's probably a fairly small price to ask that people continue to you know, contribute. Anyway, this here is a concept that what Alex is bringing up, which is not really worth discussing in great detail for people who are just new to trading. You should, if you're new to trading, you should probably just stick to the one time frame rather than convoluting your experience by adding in additional time frames. Now, however, if you want to become a next level trader, and why you'll also experienced, you know, I had a complete lack of experience of seeing this anywhere on YouTube, because let's face it, everybody on YouTube isn't actually a professional level trader at all. They're charlatans for the most part. Sorry, it's true. You'll never have seen anybody talking about this unless you've watched the likes of, say, Eric Crown, okay, who's actually, you know, is a good level trader, right? Okay, unless you've watched one of the rare ones. So 9 out of 10 people don't realize that the difference between new traders and experienced traders is the ability to link the time frames together and see the narrative across the time frames. Okay, you need to be able to do it across multiple time frames. Now, and you'll have noticed in my episodes today that very casually and without massive reference to it, I've flicked between the weekly, the daily, and the 4 hour with regards to the charts to show people what to be looking for across the different time frames and giving them a good idea, at least just a taste of that sort of thing. So yes, to answer your question, you should be looking at different time frames. However, to also answer your question, if you're relatively new to trading, you probably will end up encountering more problems than you solve, or raising more questions than you answer by focusing on that too much. Okay, watch out for it, because what can happen is that you confuse yourself. Nevertheless, you should be entering a trade simply upon the X touch point of a trend line drawn on any arbitrary time frame is overall a pretty poor strategy for success. Nevertheless, all strategies for success are not determined purely by the decision making that you use to get into the trade. They're more determined by the decision making you use to get out of the trade. So on a risk to reward basis, if you're finding yourself being successful doing it, then by all means continue, because what's working for you is going to be what works for you, and that's absolutely fine. The ability for you to make money trading is going to be far more determined by your ability to manage risk, i.e. where you get out of your trades, of course, as well, once you're in them, than it probably will be by you choosing the point at which you get into them, if you are able to do a decent enough job of identifying key zones, and then you're able to be consistent with that approach to trading and iteratively improve upon it. Okay, so to answer your question, A, from a starting point of view, very good. B, from an advanced point of view, pretty likely to find you being scuppered fairly quickly with that as a fairly arbitrary point of view. The third touch line on a diagonal trend line. Diagonal trend lines are less reliable than just straight up horizontal trend lines. Okay, much less reliable than them. So there's that, and then you know, the third touch of them is an arbitrary thing. I mean, that's really, you know, the third touch of a trend line on a 15-minute time frame probably looks like the prices are rolling over on the 1 hour time frame. It depends, you know, it depends. And again, the angle that you're drawing it at, how close. I mean, if you're talking at a greater than 45 degree and you're getting 3 touches on them, you could be looking at, you know, I'm talking much greater. If you're talking about a sort of 20-degree slope here and you're getting third touch on it, then you're probably talking about something coming to the end of a parabolic move. I mean, just as a simple example for you, if you've done the same sort of basis on GME, just to bring this up before I move on to the crypto section of this video, if you were to have done the same sort of basis over here and you said 1, 2, 3, then so I'm not going to enter it here, I'm not going to enter here, but I'm going to enter at this sort of third, you know, you're talking about, maybe that's the 4 hour time frame, maybe that's not so great for it. Let's jump down to the 2 hour time frame so you can see a bit better, and it's logarithmic, so yeah, it kind of needs to be, doesn't it, when you look at it like that? So, you know, it depends. Like, so we've got this point here, this point here, this point here. So you're kind of coming in and saying, you know, it depends. This is an arbitrary example, so it really depends. It's not very good. Again, you know, how are you going to draw in your trend line? Where is it? You know, etc., etc., etc. Nevertheless, as a starting point for you, just getting into what you're doing, pretty reasonable way of doing it. I highly suspect when you talk about third touch, etc., you're talking about low term time frame stuff, most likely overall, you know, because you're not waiting for days and days and days and days and days. At what point and what side of the trend as well are you looking at? Are you getting into it on the third touch? Are you moving towards the top side, the downside? Is it in congruence with the previous trend? So here you're saying I'm going to get in on the third touch of this, but of course you're talking about taking a long here, when quite clearly at this point here in the trend here, you're in a sort of downward trend and move. Maybe not, I mean, this is a GME again, don't want to confuse things, but if this was coming from, and previously it'd been higher and higher, and this has just been trending down the entire time, then what basis are you really taking it off of? Because obviously you're counter trend trading at that point without even realizing it, or are you going to go with the trend, etc. So without any real multiple points of confluence, you're cutting yourself short there on that one, by the way. The Dead Money Alistairs says, I've noticed that exact thing. Tubers are just repeating the few things they've learned to use. Also, they're just repeating the few things they've seen other people talk about. I, myself, have got a following of technical analysts that are quite big. For instance, the likes of that Martini guy. He likes to watch my videos. I think he's a great guy. He's absolutely welcome to. Great guy, good stuff. You've got Crypto Newton. He watches my videos. Great guy, good stuff, excellent. But you might not have heard of either of those two. How about Matty Greenspan? Matty Greenspan. Hi Matty, hope you're doing well if you happen to be watching right now. He doesn't talk in the chat. He watches my videos as well. You know Matty Greenspan. He's got hundreds of thousands of followers. Now, again, big disparity here between stuff. I'm really proud of those things, you know, those facts. But whatever. Third touch on a 4 hour is more accurate. Thank you, Peter. So it really depends on what time frame, what you're looking at, etc., etc. And really, you know, to jump back over to Tilray as well. To jump back over to Tilray, bit dyslexic writing that one in there. Then this is the current situation here in the 50-minute time frame. Again, confusing stuff, right? 4 hour time frame, however, if you're looking at this and saying, I'm going to wait for the third touch, you know, and no problem with it, then what you're looking at is getting in at around about now, right? However, you saw the depth of the analysis that I just did on it, right? You saw the sheer scope and all of the reasons and the factors of confluence and everything else that I put together to build up a narrative that took a significant amount of time, experience, and knowledge to be able to put together, compared to ultimately the same point there where you're saying, I've got a trend line here and I'm going to go 1 touch, 2 touch, 3 touches, now I'm getting in. Okay, fine. Sometimes you'll find great reasons for doing so, which happen to line up with other things. But to willfully ignore those other things in the face of what you could be looking at is wrong. And of course, as well, let's also be clear that you could probably have done this 1 touch, 2 touch, 3 touch down. Okie dokie, but where do you take the profits at? You know, fine. What's it mean? What's it mean to be trading from that point of view? I would like to say thanks to everybody for joining me here today for today's live stream. Mike Holman, thank you so much. I've not seen your name before. Really do appreciate you joining in. K-Doc, thank you so much. Hey, throw a guy a break, you guys, with the millions of followers. Give him a mention to your viewers. Yeah, big time. To the people who watch them, but you know they're not going to, because it doesn't. I don't mind, but it, you know. Anyway, like that's the thing. That's not what we're all about here. I don't mind. I don't want somebody else from outside of the community, which these other people are, influencing the growth of this community. This community is going to grow naturally and organically from within. I'm not putting out clickbait titles. I'm saying to people, if you find value here and you think it's real, then help support the channel or it'll disappear. I'm not going to rely on the YouTube algorithm justifying my existence. No, the YouTube algorithm justifies the existence of channels that out there like MM Crypto, etc., whatever, nice, super nice person and all that sort of stuff. Relying on the channel, I mean, it's not something he doesn't talk about. He talks about it in all of his videos and stuff like that as well. He's quite transparent about that sort of stuff, and fair play to him. That's what keeps that thing going. What I'm looking for here is to surround myself with people who are good traders or want to become good traders. That's it. It's all I really ever wanted from this thing, was to be surrounded by a community of good traders who want to become good traders, right? And the money will follow on thereafter. You don't need 1 million different followers. If you find 1,000 different really good traders who are all willing to put in a tiny little proportion of their income to keep this thing going and pay it forward to help somebody else who's new to trading become one of that 1,000 group, you know, for the likes of Always Learning, this time next year he might be better than 5 out of 10 or 9 out of 10 or a significant proportion of other good traders just by watching along. in the future, then he might think to himself, I'm going to pay this forward and help somebody else do what I've just done, etc, etc, etc. I've been doing this for over a year now, so there's already a whole succession of people who've become better traders, etc, etc, and that will continue on and continue on and continue on, and I don't mind. I'm all about quality over quantity. That's what we're doing here 100% of the time, right? Okay, great, nice one. Thanks for that little tip, by the way, everybody who's been saying that, and for all the nice stuff. Elwo's learning. Yeah, I'd hope that those that are watching with large audiences are actually giving credit rather than just taking the info and regurgitating it to their audience. Well, they don't. Why would they? They'd feel a sense of shame. There's this other thing called imposter syndrome, you know, or feeling that people have, and it happens to everybody. In fact, the more intelligent you are, the more likely you are to experience it. So the only people who are out there making videos on YouTube are of above average intelligence to begin with, and there's also the Dunning-Kruger effect, whatever. That's the other people. Anyway, yeah. So you know, there's this feeling that people have of, I need to be seen to be being, you know, authentic myself and all the rest of it, and they find it difficult to do that, and that's fair enough. I understand, they're human beings, right? And they're just trying to do something and be successful, and I don't mind. Okay, I don't mind. And that and besides, this isn't proprietary information. This is me interpreting a chart. Everybody can do it themselves anyway. I don't own the information and all the rest of it. It's all good. It's all good, right? Okay, it's all good, right? So yeah, that's the hope. Definitely pay it forward. Exactly. And back to you. Yeah, cool. Okay, as well. And that's not, and it's not directed at anybody, and I didn't mean to, you know, call you out so much. Always learning, but you get the point. You get the point. Everybody gets the point here. There's only, what, 21 concurrent viewers. I don't mind if this time next year I'm putting out the same sort of quality of content to just 21 viewers. But realistically, I think in terms of the quality to the audience size, is a huge disparity there. We're talking that should be maybe something in the region of 100 times as many to 1,000 times as many people watching along. Okay, somewhere between 100 and 1,000 times more people watching. But it's 21 is what it is. Okay, that's fine. It's not stopped me doing it yet. It won't stop me doing it in the future. The way to, you know, keep that going is obviously paying it forward. Some people will do that down the line. It's all good. It's all good. Right, so let's move on to talking about cryptocurrency. Okay. Wow. This just happens to be a chart that I've not brought up in a wee while. You can see that the measured move, by the way, or not the measured move, but the target that we had in here at this point here, and obviously I was telling folk that, you know, you trade with the trend. Here's your pattern. Let's just jump up to the 2-day time frame, right? Here's the pattern I had identified, whatever. Then I'd spoken about the different risk levels. I talked about what you would need to see happen if you were to take either of these two moves. Then, of course, what has happened is this one's essentially, you know, happened now, and that's fantastic. Great. Another chart here that's potentially got moves, etc., drawn out on it. No, where is it? Here. Nope, this is obviously different explainers. There's something here, there's something. Where is it? Excuse me. Is it the Bitstamp chart? The Bitstamp chart. I think it is. Yeah, okay, cool. So, as you can see here as well, we obviously came up and got our second target. Now, this isn't secrets. Lots of people are talking about these sorts of targets and whatever else, but this is our third target. The next one, 58,000, if we continue to go towards the top side, would be nice to see it happen. Of course, we've seen a big pullback today. I already explained earlier on in the show some of the sort of the reasoning for that with regards to stop hunts, etc. I'd like to point out the fact that we've got diminishing volume throughout this movement towards the top side. I'd like to point out the fact that they are coming in for the potential for a golden, a positive cross here on the no sure thing, but of course we've been experiencing the negative one throughout the period of time where we've moved towards the top side during this phase here. So, you know, we need to see this cross soon, and it probably will cross fairly soon. anyway, so that's decent enough. You can see that we've got an upward movement here on the stochastics that's coming in, and of course it's ever so slightly bearishly divergent with these highs, so of course we need to see things going towards the top side and continuing on the way, or else we'll have that divergence on the go. As you can see here as well, the divergence will be the case on the RSI, but we could continue to trend up the way. What we have seen is that the previous highs that came in without the divergence, okie dokie. Then we've seen that we had a retrace down the way, and that this retrace came in with, of course, hidden bullish divergence, and then we have come in here with and given the oscillators a nice chance to reset. This is all done on the 2-day time frame, so going back down towards the daily time frame, you see the exact same scenario. It's just got a little bit more detail on the story with regards to the hidden bullish divergence, the convergence on the upside, the resetting of the oscillators, the movements back into the bullish control zone. But as you can see here, there's this little feature on the go right now on the RSI in this area for us, and that's giving us a little bit of a clue as to what's going on. If we jump down again towards a lower time frame, then you get a better, clearer view of this on the go for us, and we can see that in fact, you know, we're in a phase here which is not visible on the charts up above as easily of consolidation towards the end here at a point of resistance, where we could then obviously be looking up towards the next target up the way. And it's probably worth pointing out that this is forming up for us in terms of a pattern here again with another wedge. Now, well, so far what we've seen as well with today's price pullbacks is that simply all they've managed to do is come down towards the lower end of the wedge here. So this is not an unpredictable movement, if you want to use words like predictive. Now, of course, I never do. Well, I mean, apart from ironically like I just did there now, but so anyway, there you go. That's where we saw it. It was absolutely within the realms of risk and reason, but what you can see here is that the lows that came in were not lower than the previous lows, of course, right? So while the stochastics is just simply showing us the sort of the triangular effect there on the charts, what you can see here is that the RSI has of course got hidden bullish divergence on the 4-hour time frame for us right now to be aware of, and then bringing up the MACD, that it'll not be a surprise at all to you when I eventually get around to zooming this in, and I'm saying this somewhat predictively. Well, no, actually no, yes, okay, so there's this sort of hidden bullish divergence here. We've got this upward trend for us. This is fair enough, but there's a distinct lack of a high in here right now. Okay, so there's a distinct lack of a high in here right now on the MACD as we're coming in for a excuse me, as that's a bit of a mess on the screen. I realize that it is, as we're coming in here for a potentially for the next high. So what we're seeing here is distinct, 1, 2, 3 instances of bearish divergence with this potential high up here. Very worrying if you want to put it that way, but overall the mitigating factors of this is that this is uncharted territory up in the all-time high zone, and this is what can be expected, and that ultimately you're looking to try and continue on with the trend. So the expectation, despite the fact that this is of course this is bearishly divergent in this section here, that there is some hidden bullish divergence on some oscillators, but it's not across the board on all of them, and all the rest of it. So despite the fact that there's all that negativity on here, what you're looking at is still going to have to be the potential for a measured move towards the top side, coming in with a target of 55 grand just to get outside of this wedge. That'll push us past the divergences. It would burn that off, pop in here and say that perhaps we're going to come in for another high, perhaps, depends on how things go, and it could push us on towards and propel us up towards that 58 grand target, which we have already got laid out here, before taking us on up higher and higher thereafter. But how are we going to manage ourselves, and how are we going to control our risk in this zone when we consider where we've come from and where we're going? Well, we have this big shock move up the way. This is after our last point of inflection in the market, so taking in a moving average here, or sorry, a Fibonacci retracement point Bitcoin up to the highs that we've got, and then considering the fact that we haven't managed to break the 236, of course we've come down and challenged it a couple of times here, for instance with these lows and then these lows, but of course those are the hidden bullish ones. That would, so long as we're above this and continuing this sort of trend on the way, that actually we're going to remain bullish on this in the face of those negative factors. Okay, however, we're also very, very rapidly aware of the crossover point here, because if we do come down past this point, we'll be doing two things at once. We've got confluence between the removal of that as being hidden bullish divergence, and in fact just simply then reverts over to being bearish convergence, and of course then we're breaking past the 236, which in and of itself is a significant thing. We're taking out the market structure lows, but also we're moving outside of the zone of this wedge, in which case drawing a major move back on again and saying where it could take us to would simply be taking us down as low as this blue serrated line here at 42 grand. Now of course that would obviously wipe out everybody on highly leveraged positions. 42 grand is your best buy rebuy point here on Bitcoin if it does have a retrace before continuing up the way. Now like I say, all of this sort of consolidation type affair that's going on alongside of the divergences that we're seeing at the highs is happening in a zone of course a lack of liquidity here, you know, with regards to the decrease in the volume, and we're seeing the consolidation happen at an area of course resistance, or indeed not necessarily, you know, historical resistance, but pre-predicted if you like profit taken, as denoted by, you know, this target that we drew in the other day, and of course lining up nicely with the measured move off the back of the triangle stuff that we were talking about last week as well. So this is all happening in here at this zone, so we can remain bullish on this with a very easy to, and you know, a strong opinion, loosely held, very easy to adapt and adjust to any new market conditions which may present themselves. Drop the mic. That's your Bitcoin technical analysis done. Okay, moving on here, just quick sneak peek. How are we getting on in terms of the very nascent arena that is the Ethereum CME charts? Gaps all over the place. This thing is yet to sort itself out. Clearly we've got a really low liquidity in here. This is reminiscent of anything of like the backed whenever that came in here. I'm not going to say that this has got anything positive for us in terms of the charts for it, and I'm not going to say it's got anything negative. It is, if on balance there's any opinion to be drawn from this, is that it's been underwhelming, and anything underwhelming during a bull market is not what you want to see. In fact, what you want to see is to be overwhelmed, just in the same way that our friend Joe is playing with his nice red car underneath his president's tree on, of course, President's Day today. Happy President's Day, Mr. Joe. Jumping on over towards, I'm just kidding. I've got no political opinion with regards to the American president, none at all. That's just a bit of joke, just a bit of fun, bit of satire. Okay, here we are on the Ethereum chart, and what are we seeing here if not a glorious retrace back down towards our lows of the wedge that we could have obviously have said with tongue-in-cheek was predictive for us. Now as well, to draw in a couple of extra ideas for you, what did I say with regards to the Tilray chart, looking at the crosses of the moving averages? Well, the yellow can cross over the green. It's going to give you a degree of a false signal. Not so much in terms of just simply being able to trade this thing towards the downside, seeing a 7% move down, of course, but this is in terms of rebuys fairly nicely operating for us, with this area having been a great rebuy zone for anybody trading at the time. If we were to see the yellow moving average, of course, then take out the green one. This is where we're seeing these lows coming in at. No big deal. That's essentially the 8-period exponential moving average, is then saying that on average we're in the last 8 candles on the 4-hour time frame, we're doing worse than we were on the previous 18 candles. Well, that is what you would expect to see in a trending market. Now, what we could look to, of course, is in terms of the really short-term moving averages, actually taking out the longer-term moving averages, and that would be the 8-period taking out something like the 56-period. Now, this is still a relatively short period moving average here with this purple line, but if that were to happen, then the picture would have changed, in which case you would be looking at the measured move from this towards the downside. We're still on on here for a measured move towards the top side. If we were to go towards the downside, then you're looking down to 1300. That could precipitate moves further on down the way, but right now we're trying to see if at this consolidation point in here, where we put in these little bits of highs at the 2.24, we can actually muster up a degree of strength. So if there is some sort of divergences, etc., on the way up here, maybe we're seeing a chance for the oscillators to reset. Has that happened, and have people just provided liquidity towards the bigger accounts in this section here, which was of course a classic stop hunt? Let's see with regards to these moving averages overall. No hidden bullish divergence, definite divergence there in terms of the bearish case scenario. So yes, the trend is telling us that it's towards the top side. Yes, that's what we're going to keep going for, and yes, we are looking up towards the 3.414 $2,300 or so target for our next movement up the way. Let's call it 2,350. Why not? But we're also going to have to be real about things and acknowledge the fact that if we did see a break down the way, we'd also see a break of the consolidation FR on the lower term time frames of the RSI. As you can see, though, we do have this upward slope, this downward slope being the divergence towards the the bearish divergence, this upward slope being that demand line, showing us that we keep finding our feet and rising back up above the neutral line, which is coming in more or less equidistant, more or less in terms of this one. The peaks towards the top side kind of offsetting that overall movement. If you were to ignore the peaks though and take it in from the sort of the average zones of this, then of course, which you shouldn't do, then of course that lines up in the middle, looking at that neutral line in the RSI with any movement above or below here. With the movements down the way, if we do see them, then of course we don't want to be taking out the 236. Where did we see the low coming in at as well? Well, the low today, 1650. What do we have here? The 236 in there at 1652. Absolutely fantastic, given that rebuy opportunity that we already spoke about. But let's of course wait for confirmation if we're looking towards that 2300 move for movements past the 1939 area. Let's say we need to get up into the proper, we need to get into the proper Second World War dates, push past the First World War dates. We need to get past 1916 and all the rest of it, and up to the 1945s, etc., before we can really take that confirmation and move on the way up. Okay, lovely jubbly. DMI over here, the ADX, is of course down here in chop territory, as we've seen a negative cross on the 4-hour time frame. So you kind of expect to see that in with regards to what we've seen with the divergences, etc., and this kind of consolidation effect that we're seeing within the wedge at a point of profit taken at a significant Fibonacci extension zone, with a look towards perhaps resetting the oscillators before jumping towards the top side. In here on the DMI, we're seeing on the daily time frame that the positive scenario actually remains in place. Let's hope to see the DM negative not cross the DM positive, and by virtue of the fact of the DM positive staying above the 20 line over here, then there's a pretty good chance that could happen. What does that mean for us in terms of prices? Well, we want to see things of course slowly, gradually, nicely, smoothly, evenly and consistently move towards the top side. Of course we do, but we don't want to see any shock moves down below that 1650 target of the 236. Doing that of course does precipitate the move down the way, and 1300 is your target. Movements up past 1950 give you a nice chance of us getting in the resumption of the overall upward trend, which running up to this point incidentally was of course not bearishly divergent right up to the profit taken zone, and in fact comparing it to the previous area in terms of the broad term picture, just there at the 26th of July 2020, we've actually done fairly nicely as well on the DMI. Now the stochastics is going to reveal to us that of course it is as well slightly divergent, etc., etc., but we're up here in the bullish control zone, getting these crosses again and again and again. Could we move up the way? Yes, we could. If we do move up, then there is the danger, I suppose, the sort of the unprecedented extreme highs. I would probably say that there will be a good opportunity for a decent retrace at some point on here, which actually registers on one of the bigger time frames. As we jump up towards the 3-day time frame and take all of the drawings off the chart, you can see that we certainly haven't had one of those red candles as yet, and there will be one at some point, and I think we've identified the key key things to be looking out for in the meantime, if that's what you're going to do for if that's what you're looking out for yourself. As you can see here with the no sure thing, it takes a lot of dragging to bring this back onto the screen, and it has come up to, you know, as high as it's ever been, or sorry, let me rephrase that, higher than it's ever been before. Whereas when you jump down towards the lower time frames, you can see that we're really kind of finding it coming back down towards that neutral area. That's of course expressing that idea of consolidation that we're having at the minute in what is obviously a very much big rising wedge with extreme danger for a drawdown in prices, because that 1300 area represents, in terms of just an easy profit taking target, the breakdown past these zones of a sort of 20% drop off in price. But we could even see worse than that. The two targets thereafter are $1,000 or so as well, and then if you were to go extreme beyond the 900 area, then you're looking down to 750, which of course is a massive drop off in the price. So let's hope that that doesn't happen. Overall, things are looking pretty good, bringing the drawings back on the way, and reminding folk that this is the measured move that we were talking about before, and this takes you down towards that 1350 area. Now if we do find the footing at 1350, then what that means is that we've come down towards the 50% area and not managed to take out the golden pocket. It'd probably be wise to wait and see if we get any confirmation around about 1250 before then getting back into trades which we recapture that zone and resume the overall upward trend, or else you're looking down towards that $1,000 zone. Of course as well, 1250 down to $1,000, nice $250 move, bring you down to 1,000. It's not full 25%, but it feels like it when you use those sorts of numbers, and that's what you'd be looking at on this one. Of course, the overall headline is that we're bullish on this until such times as we aren't. We've identified what would mean that we aren't. We know the area that you would want to be looking at to get in at if you want to wait for confirmation on this thing. We're talking about 1950. Thereafter, I think it's probably reasonable to think that we could get a retest of this thing, which we've seen in the same sort of a way as we saw on the Chainlink chart, which I'm moving on to just now, and let's take a look at that one. Jumping over towards Chainlink then, and bringing up this chart here and showing us that we have yet another one of these wedges on the go, and of course we have retested it today, having come down towards the price point of, let me just check, 2750. Fantastic here, having come all the way down with a big sort of capitulation event. What's that? What did you say, Rocky? Well, it wasn't a capitulation for the overall market, it was a stop hunt, a classic stop hunt. If you're ever looking for a textbook guide on stop hunts, well then there you have a great example to introduce into your stop hunt scenario for you. What do you see here is that the prices actually came down to retest this area, upon which we will have found that there was a lot of people who were saying, if we get a retest of this and break back down the way at the $30 zone, I will stop out. Of course, adding a massive amount of liquidity towards the downside at that point, bringing the prices down an additional 10 to 12% in terms of price movement. Classic stop hunt, lovely jubbly, and then a lovely recovery thereafter, dropping all the way down towards the 50-minute time frame, so you get a nice little look in here at what is actually a tweezer bottom. Here's a classic tweezer bottom for you if you want to add that to your textbook references as well. And not only was it a tweezer bottom, but it was a tweezer bottom with a V-shaped recovery thereafterwards. Fantastic stuff. We've already come back up towards the highs at $34, putting in this area of resistance for us. We've also managed to take into account the fact that on the way up here with this high and this high overall, that we're looking at a degree of the sort of divergence here on the go, and reset the oscillator somewhat with a massive move down to the oversold territory here as we put in that V-shaped bottom. What we've seen so far as well is that we've actually come in towards the neutral line and managed to find support at that zone. Very good, all indicative of the potential for upside movements thereafter. But we do have to acknowledge as well that we have come in for the textbook measured move off the back of the wedge, 60%, as Bulkowski more or less likes to do. Now we're still waiting for the next move up the way, and that's $38, and in fact we also have 3 targets towards the top side, jumping up towards the 2-day time frame, sorry, the 24-hour time frame, okay, the 4-hour time frame actually, so that you can see these 3 targets still in place, and they're very much the 3 targets that we're looking for. So far what we have is confirmation, if you like to take the bullish point of view of the pattern having successfully been initiated, and of course the movement towards the top side. And that stop hunt is of course something that would be initiated by those seeking liquidity for their long side positions, taken off from you when you've gone long, then subsequently been stopped out. Then what it means is that you've had to sell your position, somebody had to buy it. Stop hunt then of course provides liquidity towards bigger accounts, and what do we see here is the 3 targets towards the top side then thereafter from where we are now. First one is actually $40, the next one is actually $53.80. Let's just call it 54 and stop beating around the bush. And the next one afterwards, let's just call it 65. Lovely jubbly. What you're looking over here as well and seeing is that you've got you've got 3 targets in terms of the Fibonacci extensions, and I'm going to adjust this one at the top. I'm not a massive fan of the 4.326. I'm a much bigger fan of the 4.414 in terms of the upper side targets, and as you can see here, that lines up better with that other target up there towards 64, coming in here in this Fibonacci extension at 63.16. So yep, 53 as the 3.618 as well on that one. Lovely jubbly, everything over here having done what it needed to do in terms of the sort of bloodletting event. Now what we need to be aware of is of course the potential for this thing to turn around on us, catch us off guard, off guard, my friends. Bringing in this here Fibonacci retracement and looking from the previous lows up to our most recent highs, more or less here on this one, and then making it so that the numbers are actually visible. It seems that I've been awarded the come on Fibonacci guy, where's my options here on this one? Where's the options guy at? There we go. Unfortunately, we have, of course, I'm going to have to refix this up here, so that means if I use this as a little static clip, that I'll need to edit it out of the way. But let's just bring in the key areas for us to be aware of here on this one if we go towards the downside. So of course $29 would, if you were managing your risk properly, be a great area for you to think about how you would actually go about managing your risk. That seems to be locked as well. Unlock it. No, it's not locked. Whatever, that's frustrating as. Let me just move this. Yeah, yep, okay, still it's not very good, that is it, right? Anyway, so yeah, $29 is where you'll be managing your risk at. That's the lower end of the wedge from where we are now. If we were to break back down the way, you know, from where we are right now, this is a 4-hour time frame that I'm currently looking at, by the way, ladies and gents. But as you can see, we've come down here, and this is of course where the stop hunt was working it around. So people who were stopping out there or stopping out here provided that liquidity, and that's what led to this coming down to $27. I'm not going to advise you personally on how to manage your trading in the face of aggressive large accounts looking to do the whole shark approach and take out your trades with a stop hunt. However, there you are. That's the explanation for what actually happened here today. Again, this still actually remains your area to look to in terms of managing your risk. And what do we talk about when we talk about these things? Well, we talk about significant time frame candles closing and opening and closing below them. As you can see here, that didn't happen, and then we rose back up the way. 4-hour and above closures here, so consecutive ones, I'd say, you know, several 4-hour candles on a 24-hour time frame, closures below the 236 changes the picture. At the minute it remains pretty rosy. If we do go down the way and we break past the 236, yeah, you could be looking down to $25. I'd actually be looking down to $21.50 after that. I know, pain, huh? Right? What if it even went beyond there? Well, actually we have this golden pocket zone and our previous other red serrated line, and you'd be looking down as far as $18. Is that necessarily going to happen? No. What we're talking about here is managing your trades and staying in them over the longer period of time to maximize your profit potential. We've already talked about the upside targets. We've already discussed everything we need to discuss. The only thing I haven't pointed out so far is this increase in volume. Lovely. That's of course as well in no small part down to the stop hunt that happened in this period of time. Looking to see if we can burn off these divergences with any movements towards the top side. If not, then we're aware of them, and of course we're bearing in mind the key target of $29 as our risk management zone. That's it. Drop the mic. Moving on. Honestly, people, you're not going to find anything better than this. You're just not. If you do, I'm still waiting for anybody to tell me about it. I'd love to know if anybody sees anything that's even comparable in terms of the quality of technical analysis that you'll find on YouTube. I'd love to. I'm already aware of the likes of Mitch Ray and Crown. It's my position that I'm better than them in terms of trading. By the way, if you want to know, it's my position as well that Mitch Ray is number 3 on that list. He's number 3. Crown would be number 2. Of course, I'm number 1, but I'm going to put myself there just for the fun and games of the whole thing. Removing myself from that equation, then that would be my number 1 guy out there in terms of other people and my trust in their ability to actually trade in terms of established technical analysis, daily basis videos for trading for you. I think he's also quite a nice guy as well, albeit he swears a little bit much on his videos, doesn't he? He does swear a little bit much, right? But anyway, there you have it. I don't think there's anything comparable, but let me know. Just obviously those two are names I've already mentioned. I would love it if anybody knew of anything even remotely close. Please do tell me their names so I can get a wee message to them on Twitter and whatever else, give them a shout out and then mention their channel on the show. I'm not a YouTube monogamist. As you can hear me, I've already mentioned a few different YouTube names and whatnot in this show. I've got no problem highlighting other channels for whom I got respect for. By the way, everybody check out TradeSpotting, great channel. TradeSpotting, Trade Spotting, good channel here on YouTube. However, you know, other people aren't pushing this channel, whatever. I'd love to know. Maybe as well set up a collaboration with one of these guys one day. I would love to know it. Friendly people out there, by the way, if you're just looking for friendliness and whatnot. That Martini guy, great guy. I think he's a cool dude. Nice stuff. Chris from Crypto, another great guy. Anyway, moving on with the show, and what do we see here in terms of the stop hunt which happened? Now, the stop hunt happened across the board, and how did it function? It functioned through algorithmic traders. As you could tell, everything happened all at once, very, very rapidly. That's not organic in the typical old school sense of it. There wasn't some sort of big on the trading floor run of stocks where one went down and then 5 minutes later another one went down and then 5 minutes later another one went down and then 5 minutes after that 50 of them went down. That wasn't how it happened. Everything happened all at once. Classic stop hunt and very much an assassin's game for you to be involved in there overall. What we're seeing here with regards to Tezos is that the prices dropped all the way down as far as 384. Wow, ouchie, ouchie. Now, I haven't spoken about this in the previous recent times, haven't spoken about it. We talked about how 470 would be your best buy point, right? Okay, fair enough. However, that doesn't preclude the need to do risk assessment along the way. Seeing that the prices came as high as the $5.85 area, would you have been wise to have taken any profit along the way? Well, when the prices dropped down below $5.28, then you probably would have, especially when you look at this and say that we had consecutive opens and closes here in the period of this big chunk of a day. Then we actually saw the prices dropping down from the 382, giving you yet more reason to think to yourself it might be wise to take profit, coming in here at $4.90 or so for its body closure, but then finding support in here at 470, offering up great, in fact fantastic little trades for people to be had in terms of the small term time frames if you were wanting to be so you know, taking a little bit of a risk to reward scalpy move off the back of it, because after we saw the prices coming down as low as 470 over here, we saw them coming back up to $5 again thereafter, and that gives you a decent enough move in terms of profit, just so that people are aware. Bear in mind that that was, of course, a nice solid 6% or so profit, but it was not ultimately good enough, having come down below the 382, at the 236 obviously before, and the 382, and is indeed as well the 50% area. So that talk from before, when we talked about it the other day, is 470 as being your best buy point. Well, it did kind of fail for us in that sense when the stop hunt got initiated, and what we're seeing here is that we're back here at that price point again of it's currently 488, but we're at that price point yet again. The difference between the HIT BTC price chart and the other ones has been somewhat diminished, but as you can see here, the stop hunt also happened over here again. Different exchanges, different coins, all the rest of it. Let's just take a quick look then in detail in terms of the stop hunt and when it happened, right? 3 minute time frame, we can see that it happened here. What even 1 minute time frame, right? 1 minute time frame. Is it going to be enough? 1 minute time frame. This happened at precisely 2:20 a.m. Jumping over to Link USD on the 1 minute time frame. Where's the stop hunt? God, the 1 minute time frame, such a head wreck, isn't it? Where's the stop hunt on this one? Here it is. Right, this happened at. Oh wow, this one was a bit different, wasn't it? In a sense, it didn't have that one big candle. That all happened with 220 here. We go 220 here, 220, and then boom, and it pushed on down the way at that point, right? Okay, so there was this 220. Now, I'm not going to go through everything all at once. I think if you were sat there watching it last night, I was fascinated watching it happen. It was interesting stuff. It did happen across the board all at once, and it's always interesting to see how, for instance, for all the people's want and will and desire to talk about things like fundamentals, etc., 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 that while you want to split out the apples from the oranges and be able to say that this is like this and that's like that fundamentally what we're talking about here is a relatively nascent market, well, extremely nascent market, relatively low liquidity across the board on most of these coins, and of course a dominance of pushing, people being pushed around, you and I, the individual, getting pushed around by the algorithms and the like out there, as well as you've got the conspiracy across exchanges, across all the different coins, all the different things happening at once. It would be unreasonable to think that this was actually just a group of disparate, unconnected human beings all simply trading off the back of some particular price point where they decided to turn around. No, there was clearly a degree of stop hunt happening. And how would be the easiest way? Let me just throw it out there to everybody. What would be the easiest way of conducting one of these things? Well, if you happen to have the information by looking at your own books, if you're running an exchange, for instance, you might be able to run one. Anyway, moving on here with the technical analysis for us, and let's just try and see if we can do a good job and get this wrapped up fairly quickly for the old Tezos chappity wappities. We've already discussed like where we come from. We've already discussed the fact that the difference between the exchanges has kind of diminished as a result of the recent price action, and we've already discussed what we covered recently in terms of where your best buy point would be if you're looking to continue towards the top side. Now, best buy point in a world where you're not going to get wiped out by sort of nefarious actions outside of your control. Nevertheless, moving on, we're back at that point again now, so maybe it's worth considering whether or not we're in with a shout for continuation towards the top side or not, right? We have also done a couple of key things which would have been worthwhile looking at. We did also did I say that it was the best buy point? Well, the best buy point was $4, sorry, as a retest of the pitchfork in the background. We did discuss that actually and say that's your best one, or whatever, from a non-leveraged position, looking to just simply get in and start dollar cost averaging. Then 470, once the prices had been as high as 570, was your best buy point in that sense. If you're looking to just try and really get in there with a good move, then $4 was for you. By the way, we will also take a look over here at Cardano, my friends like Sikander. I wonder if you managed to get in on this move overall or not. If you're watching today, Sikander, let me know as well. Anyhow, just on with this one. Moving on with this one. Thanks so much to everybody for the comments. I just want to read this comment out. It's caught my eye for a second there, from Dan Anthony. Holy shit, I didn't know this guy was this fucking good. What the fuck? Where the hell have I been? Why am I just finding him now? It's been 3 years in this space. Thank you, my friend. I really do appreciate it. And like K-Doc says, spread the word, Dan. Hit like and subscribe. Remember the bell icon. I really do appreciate it. Isn't this a wonderful thing? Like I say, I love the intimate sessions that we have here. There's a real intimacy what we have. That won't last forever, probably. However, if you want the intimacy, if we're in a position where we can continue the intimate sessions. The only way that I'll keep doing this into 2022, considering that I've already been at this, for example, today for 2 hours and 6 minutes, and I'm not done yet, and I spend a significant period of time frequently doing this sort of thing, all the time, and I run a Discord and always in there chatting with people and everything else, and really trying to help empower you all as individuals. I kind of decided to myself that I would put dedicating empowering you all out there as individuals ahead of my own personal gain. So I really wanted to try and, it's finance that we're in, and the outside world has this idea that we're all bad actors and negative people, but I genuinely believe in my and our attempts as a community to improve and make positive change, to affect AFFECT, to affect positive change in people's lives. I think it's possible to do that, and it's wonderful doing it in this intimate setting. I really do love it, and it's fantastic. So, anyway, the only way I'll keep doing it though into next year is if people join the Patreon and everything else. So I've already been putting that out there. Everybody knows about it. My target for the year is minimum $7,500 per month on Patreon, or it's kind of just, I'm not going to keep doing it. Fair enough, right? Or else, of course, I'm not thinking along those lines, because there's 250,000 subscribers on the channel, or whatever, etc, etc. For instance, by the way, just so everybody know, 2 hours at it today, not a single donation. Tony, don't donate to me right now, Tony, just because I said that. I know you're super generous. I love you very much, by the way, my friend. And Sean, by the way, just because I said that there now, again, I know you're super generous, my friend. Don't just you do it just purely because I said that there now. I'm pointing this out to everybody else though. I've been at this for over 2 hours today already, trying to help people as much as I possibly can. Not a single person's donated. We know, right? So when I say to people like Dan comes in, he says that I'm not going to continue doing this forever for free, being taken advantage of, okay? Now, I want to affect positive change. I know that to affect positive change, there's a degree of give and take. For a period of time, it could be seen by some people like I'm being taken advantage of by, selfish people in the world. I know that could be the way it is, but in order to affect positive change, I'm doing it sort of sans frontières, if you like. I want to, not put up any barriers between me and yourselves, but that's an unsustainable, unscalable situation. Quite clearly, I'm not going to do that, and quite clearly, I'm not going to rely purely on the likes of, the last two people to have put a comment in here, Sean Thomas and Tony Wright, both of whom are the two biggest donators, or two of the biggest donators to the channel themselves. It's not their responsibility, although they have been paying it forward. So very good to them. They paid it forward so that everybody else has been able to benefit from it, and I love them very, very much. I think they're fantastic people. However, let's be real, ladies and gentlemen. If you want to continue having access to these intimate sessions, great. Otherwise, I just take it off the public domain, and those guys would probably subscribe to a $10,000 a year paid service. Okay, that's what we're talking about. So great, thank you, Dan. Really do love it. Let's just fly through the technical analysis. In fact, I'll do this. I'll run my intro credits and everything as well, and do this kind of properly for this one right now, right? As well. So. Hi friends, Rocky. Wait, I'll just drop a stream marker so you can see what we're all about here. Hi friends, Rocky Outcrop here, bringing you your dose of Tezos technical analysis. Let's dive into the charts and see what there is to be seen. Thank you so much for joining me. I took too long because I'm trying to find the intro clip. Just going to say that again. Hi friends, thanks for joining me for the Tezos technical analysis. Going to run these intro clips. After that, we're going to discover everything we need to know about Tezos to be able to trade this with success. If you are interested in that recent stop hunt, then look at the live video where we discussed it all in great detail, but we'll be talking about where we're going from here into the future. Let's run those intros. Fantastic stuff. So like I say, if you want to know about this big old wick here, check out the live stream I did today where we discussed the stop hunt in extreme detail, talked about the machinations for how it would happen and everything else, and why certain areas are very important, and of course what a stop hunt is. Anyway, moving on with the charts here, we can see that the current price of Tezos is actually in at around about Dan, you start Dan. coming up in a second here on screen for everybody at home. You're a star. So is in it around about. By the way, do live streams all the time. Please join me for a live stream one day. Would really appreciate it. You have the likes of Dan showing his appreciation for the channel. I'd really love to see you there. We put out some of the best information. In fact, if you come back in here and scroll through the live chat, you'll see some sweary wordy whatever. I can't even do that. I can't even do it. Dan, thank you so much. Right. I really appreciate that. Hi friends, let's take a look at Tezos technical analysis. Just as Dan donates $19.99, really do appreciate it. He says, you're amazing, and you know what, I think you're all amazing too. Be sure to join me for a live stream sometime. And the live stream that we're doing today, we talked about the stop hunt that just happened, and you can find out all about that and more if you want to by looking, fuck it, you know, it's really quite hard. It's really quite hard to run these little static clip things when you're in the live stream mode. This is the last time I do it, and it will work this time, because every time I say it's the last time I'm doing it, it works. Thank you, by the way, Dan. I really do appreciate that. And join the Discord, by the way, link in the description. Hi friends, join me for a live stream sometime and we will talk about everything that you want to know about technical analysis. This is a Tezos technical analysis video, and we saw a stop hunt happen last night across the board. That's discussed in the live video. In this particular one, we're talking about where we could be going from here next. The current prices of Tezos actually are in around about the 484 area, up above that 470s zone that we wanted to see the prices maintain themselves above. Today's candle is this hella doji candle that you have here. Massive wick towards the downside due to that stop hunt. Jumping down the way though towards the more recent price action, you can see we have had a degree of positivity, of course, since that lows, with a number of positive candles towards the top side. Where have we managed to come so far in terms of the Fibonacci retracement towards that we were in previously? We've already come down as far as the 786, and in fact done 100% retrace. And in fact, the stop hunt came down as far as, I'm discussing the stop hunt constantly here. This is the last time. 3000 Trin, good to have you here. Lols at all my stupidity. And whatever. Hi friends, Tezos technical analysis, Rocky Outcrop here. Hit that like, subscribe, you know you want it. Thanks so much for joining me. The prices had a big stop hunt yesterday. It was horrific. They went as far down as the 1.272 Fibonacci retracement point, coming all the way back down for a lovely retest of the pitchfork. Like we did talk about this in the past as being a nice entry, giving you a sort of $4 entry. You could have even have got in at 385, and then we've managed to make it towards the top side ever since. Let's actually remove that Fibonacci from there and draw in one showing us from the highs that we had all the way down to where we actually saw the stop hunt ending at. How have we done here? Well, you can see that immediately you would have known that you could have got back in on a trade, and of course your risk was massively diminished by the fact that we came back up above the 236. Having said that, in the subsequent 4-hour period we did drop back down again, but both of these do closed up above the 236, and that's really good to see. Then we've moved on up the way and gone higher and higher since, up towards 480, and we're above the 50% Fibonacci retracement zone. The next key area for us towards the top side is going to be $5, where of course we know, structurally speaking, we saw this inflection just before the stop hunt actually was initiated. After that, I think then this Fibonacci could be absolutely discarded, because what we're doing then is looking on beyond this for other targets after this. We've already broken out of the pitchfork on the big time frame, and now we've retested it. That's very good to see. The next targets towards the top side remain here, and how fantastic it is to be talking about this, having seen the prices be down as low as 380s, that we're going to be looking up towards next the $6.27 area. That's where the 1618 Fibonacci retracement point is, from the previous all-time high down to the market cycle low before we started launching towards the top side. The bullish positivity remains very much in place here, and in terms of measured moves off the back of things like this here, now of course this could be a wedge or a parallel channel. I'm not doing a measured move off of a parallel channel, however. I'm merely showing you that if I were to change this around and form it into a wedge, that of course the measured move remains exactly the same, and we massively have already outstripped that loads. We're already on the way up towards the top side. This is more or less looking at things from the point of view of trend. Therefore, I'm going to hide all of these drawings off here, and I'm going to jump down from the 2-day down to the 24-hour and show you that so long as the prices remain up above in terms of a daily basis, closing closing and opening above, you know, not getting consecutive opens and closes below the 18 period, above the 18 period, the green moving average here, we're doing pretty good. But then this is as well going to use these on a lower term time frame to show you what you want to be looking out for. This is the 8 period exponential, the yellow line, the green line is the 18, the blue line is the 34, and the, what is it actually? God, screw it. 36 and then 54. They're the atomic numbers. I always get a bit dyslexic when it comes to reading them out. We're all on the spectrum. So long as the 8 period exponential moving average stays above the 18, we're probably pretty happy here to remain positive for the overall upward trend. But actually, I would go as far as to say, so long as the 8 period exponential moving average on these lower time frames remains above the 54 period moving average, then we've not seen things turn around. Looking back down the way, you can see that we do occasionally get tests of this sort of a thing. But since the crossover here, on the 2nd of February, when the prices were in around under $3, we've not looked back really at all, and we've kept going towards the top side. You know what? I'm not actually satisfied with this episode in any way whatsoever. I'm going to just keep making it at this stage, but I'm not satisfied with this as a static clip. Just for everybody's knowledge, I don't feel like I'm happy with it. Anyway, the point that I'm making there is, so long as we stay above these moving averages, everything's kind of looking pretty good. I don't want to see them crossing over. If we do see them crossing over, it's not that big a deal until, you know, your first early warning sign is going to be the 8 period exponential moving average crossing over the 54 period moving average, and perhaps initiating some sort of downward trend. And you can see an example of that, you know, here when we crossed over at 295. Later we saw the prices go down to 270, so there was a bit of a drop off there in prices, but that actually then didn't really see them all properly crossing over each other and spanning out nicely. It's because as soon as the 54 period exponential moving average crossed over the 50, we can see that the prices were actually crossing back over the 8 period as well at that stage, you know, never really giving you any proper confirmation. And overall then when you zoom back out again, all that forms is just yet another oscillation along the way, putting in your lower lows on the 4-hour time frame. And on the bigger time frames then, you're seeing that as you're coming in for your lows, you never really got that crossing over of all the moving averages, and since then it's not really happened. And that's kind of the point that I'm trying to draw out with that one. I'm just talking about this in terms of, you know, you're in it to win it until such times as we've taken out our profit taking targets towards the top side, which would be good areas. I'm not a financial advisor, none of this financial advice, to take some of that profit off the table so that, you know, you're always managing to accumulate rather than simply accumulating just to distribute it back out. You know, you don't want to be Robin Hood, steal from the rich just to then give it all back out again to everybody else. You want to have a little degree of profit taking in there for yourself, so make sure that you do some of that along the way is kind of the point that I'm making there with that one. But so long as we're staying above all these targets, we're really pretty much okay. Then from where we have been to where we are now, Fibonacci retracement points, what's that going to be like, and what are the important things to look out for there? And it's again 470s is the zone, like I kind of was trying to get at the start of the episode, drawing in a Fibonacci from the lows down there at that 150 where we had the last big stop hunt before we ran towards the top side, you know, and then we've just had another stop hunt. Could this recent stop hunt be an indication to us that perhaps big whales are accumulating and want to see this thing rise up another 50% towards those $6 and higher targets, bearing in mind that the top target there at the 4414 is coming in at around about 14, so you're talking 4 as your targets, right? That's where the next area is. Could that be the sort of thing that we're seeing happen with the stop hunt? I would love that to be the case. That's reading into things a little bit more than perhaps you really should. But it did happen across the board for everything all at once, and it's kind of an interesting little scenario for us as we've retested this and given us confirmation that we have indeed broken outside of this pitchfork and managed to move towards the top side. In terms of oscillators, then bringing these things up, you can see that for our most recent of highs, we did it without bearish divergence. We're still massively in terms of the no sure thing indicator in the upward trend, as you can see here on the 12-hour time frame. 24-hour time frame, yes, okay, there was a little bit bit of confusion over here, just as we were inside the pitchfork still, but since breaking out of it, still massively in a nice, a nice upward move, not taking out the big all-time highs on this one. Plenty of scope for us to move up the way. We've never really had the full parabolic run on this one yet, and it could be super exciting for us. In terms of things like the RSI, again, no bearish divergence for us. Unfortunately, we don't have like a huge load of hidden bullish divergence on that one to get us to like be super excited about it. And likewise over here on the MACD, I don't think we have it. Yeah, we don't either. We don't have hidden bullish divergence here either, but we're convergent in terms of the upward side. And then we can see here that during this period here, as we spoke about recently, where there was that bearish divergence, as it was all happening at a point of consolidation, that was an opportunity for the oscillators to reset. If you've been watching the other things that I've been talking about today during the period here, that's a perfect example to make contrast with regards to what bearish divergence can be like at the top end. Take a look at Ethereum's chart right now if you're interested in that sort of a thing. Anyhow, this is all within the scope of charted territory, having been within those prices before. Now we're up at all-time highs, and we're continuing to do things with an increase in volume, and of course without the divergence, and with all the oscillators pointing in our favor. Sometimes you've got to give credit where it's due. Tezos is a decent coin in terms of trading. The liquidity is there, the interest is there, and we're seeing things having given us a good degree of confirmation. If we manage to stay above the 470 area, then very, very good. Of course, breakdowns below 470 could precipitate moves towards the downside, bearing in mind that the 50% Fibonacci target coming in here at 360 would be one of them, and the 618 there at 315 would be another. But also, let's look towards the moving averages here on the 24-hour time frame and say, so long as we're staying above the 18-period moving average on the 24-hour time frame, we're doing very well. On the lower term time frames, so long as we're staying, so in terms of the 12 hours, so long as we don't see these cross, the trend hasn't changed. And by that I mean all of them crossing over each other. In terms of the low term time frames, we will see instances along the way where we see the yellow 8-period exponential moving average, for instance, take out the green 18-period moving average there. But what that generally shows you in terms of this low-term time frame is buying opportunities. Let's see if we can see, as we have done, the bodies closing above the 54-period exponential moving average along the way as we continue the trend up the way. And we haven't seen significant pullbacks until we push past those zones in the past. And I'm talking about natural organic ones, not massive initiated all at once across the board accumulation areas for exchanges, the likes of which, for instance, could be the likes of HitBTC, which stopped withdrawals on Tezos because it doesn't have the money to actually present them out to people. Now, it would probably tell you a different story, but it needs to somehow accumulate Tezos enough to give it out to people to reinitiate its withdrawals, rather than operating on a 1 in 0 out basis as it is doing right now. We're suspicious, somewhat fractional about it. How do these exchanges cope with stuff like that? How do they make money and really triple, quadruple down when they have all of the information there which they could manipulate while the markets remain unregulated, before we actually get proper regulation on markets and prevent that from happening? Even when they are regulated, let's be honest, they could probably get away with it anyway. So how would they do it? Well, that's one way of doing it. Little conspiracy theory for you. Let me know what you think about that in the comments down below. But of course, everything is pretty good for us. As long as we stay above 470, we're looking at 620. Cool, nice. See you next time. Right, so that's that one. Now I've done all the TA that I oblige myself to do on a daily basis. Let's take a look at some other guys for us. Hi, this is technical analysis for Cardano. Sikander, are you watching this particular episode? Look at that big retrace. Did anybody get in on the pullback, or did it all happen too quickly for you? As you can see on this one, the prices actually dropped down as low as 68 cents. Given that the highs recently were up there at $1, you're looking at a significant pullback in the price action, and wonderful stuff to see that we've actually managed to go towards the top side. How could this have been predictable? Well, there was actually quite a lot of information for you on the charts in terms of this stuff. Recently we saw a shoulder, a head, a shoulder, and then the measured move off the back of this could be along the lines of a nice head and shoulders move. On this particular chart, it might not add up to looking like that, but there are other charts out there where it's a little bit more head and shoulders-y. Perhaps that's not the one for us. Maybe I need to jump over to this list of other coins that I have here. For instance, what did 1 inch look like on it? No, it was different to the market. I think things like VET maybe had it. Nope, again, excuse me, really, you know, not doing a good job here with this one. What about Luna? Where's L? Do I have Luna in here? Link? No. Regardless, there was a bunch of altcoins that were showing a potential for head and shoulders. What was it though? What Dodge maybe? Was it Dodge showing it? I know that there was. I saw this. I know that there's out there somewhere. Maybe it was just only in the 15-minute time frame before it happened that I was looking at it. Nope, not that one. Not that one. Not that one. Forget everything I just said. It's out there somewhere. Go ahead and look for it yourself. Whatever. Who let the bulls out? Boop, 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 boop. Well, you might be late, mate, but you're actually just in time for the end of the copyright-free music section that I was using on YouTube to fill in the background of today's episode. So you were late for that, which is fine because you don't need that. You're a musician yourself. So let me just bring up the in fact, I'll do this on screen so that people can see what I'm doing, so I can give you another shout out, because you're my friend, and why not be nice to be nice. So let me just go over to SoundCloud and bring up my good friend Dance Trance Hood Medallion, and that of course is Who Let the Bulls Out. Have you got any songs to request, my friend? How about we just choose one that's got a title that might work for us? Now, we've already had Pump Thump Bump Bump on here as well in the past, so let's go for some Velvet Sati as the background to this little sort of thing, because it's a bit funky. Right, cool. Thanks for joining me, everybody. This is a selection of altcoins right now. I'm going to take a look at Cardano, going to take a look at BLXZ, ZRQY, whatever you name it. All the ones essentially that are being traded on the futures account on Binance. Thanks for joining me. Let's see what we can find out by looking at the charts. Run those intros. Here by taking a look at the Matic chart. This is a rather low time frame. You can see very much the V-shaped recovery that we've had since that stop hunt last night. Very, very good. What's this one doing that maybe the others aren't is it's taken out the areas that we had seen here structurally as it kind of depreciated before completely tanking and then coming back up the way. Very nice to see, getting these increased highs drawn in here on the low term time frames, and seeing that of course we've got convergence, little bit of bearish divergence here on the RSI, maybe something to be taken an eye out for, as we can see the same thing happen here on the MACD. But will we just simply burn that off and push up the way? Could well happen, given that we're in a good degree area of support and resistance. Getting a little taste of this sort of thing at an area of support and resistance happens frequently when you're doing your charting. No big deal. Just, you know, look and see at your if you look and see. This is so loud for me, it's distracting. Turn that down a wee bit for me. Just look and see if you're getting a bit of the old bullish or bearish divergence, etc., and it's happening at a degree, a price, where you've got previous support and resistance. And as you can see here, this is a very significant one, being the two significant support zones after we've come in for our highs recently. Then maybe the market is asking a couple of questions, at which point you could look towards a couple of little key things to say, well, so long as we stay above the 236 Fibonacci retracement point, which we're doing right now, and that comes in there at 10.8 cents, nearly 11 cents, but not quite, then we're still in line for potential upside. And zooming on in a wee bit further and saying, well, we've also got the moving averages here, and staying above them, rather tasty, up towards the 4-hour time frame. Then you can see that as well, while this is maybe, you know, happening on the low term time frames, that little question and whatever else, that really we're doing quite well here, having come back up above the neutral line on the RSI, not actually breaking into the bearish control zone, and then staying above the neutral line here on the no sure thing indicator, up above the neutral line on the stochastics, pointing up the way, nice and erect, what you're looking for, and about to have a cross here on the DMI. This is the positive story over here on Matic, and that bleeds itself out across the other main coins that we're looking at. So let's do a selection of them. For instance, Cardano, not got that DMI cross over here quite yet. We have recovered a little bit, not structurally taking out those other areas quite yet, though. We didn't come down to the bullish bearish control zone. Good stuff. We are above the neutral line over here. Interesting point to be had though is that we did get a nice dose of the old hidden bullish divergence on this one. Again, these things, while they do operate with differences among them, the overall market at the minute is more or less operating together as a big homogeneous unit. Is that going to be the case and continue to be the case? Well, I think, you know, it very well could be. Moving on then and taking a look at our friend Dogecoin, the coin which is, you know, really not worth anything other than Elon Musk's love. And here we have seen it come down as low as 46. Some people were waiting for it to go down to 40 to get in. Oh, dodgy. Well, it didn't actually make it there and has recovered up since. But again, unlike Matic, we haven't really taken out any of these areas that we, you know, on the way down the way that we were experiencing. We've only just recovered this yellow 8-period exponential moving average. Will we see things go well? I think that we are in a position to benefit off the back of this liquidity stop hunt. Dogecoin, or Dogecoin, whatever, slightly less so. This is really good to be trading in terms of just, you know, being kind of brutal about it and taking profit when it's there. That would be my main recommendation. But how about something else like Band, which at least has got a nice point of comparison to be made with the likes of Chainlink and has utility out there in the world? How's it been performing? Well, exceedingly well, essentially, since this potential sort of head and shoulders type move that led to that sort of stop hunt capitulation area. Seeing on the 4-hour time frame that we're staying above the 54-period exponential moving average is something you're going to want to look to across the coins that you're trading right now. If we stay above that, that's pretty good. Likewise, of course, we want to be staying above the 236 Fibonacci retracement point. Now, with regards to Band, this has been in a heavy upward trend, and it's nice to see it in no small part inspired, of course, by the movements that we've seen with the likes of Chainlink. But I've taken it from the Fibonacci retracement from the significant low that you would need to be drawing it in from up to the most recent high, making sure it lines up properly and showing you that it's only really at this point here recently, really in the last number of hours. What time is it right now? In fact, yeah, in the last part of this 4-hour section here, that we've managed to break up above the 236 in the next 4-hour period candles. And of course, when you're watching this, a number of 4-hour candles will have gone by. The question is going to be, have we managed to see the prices stay above $16.80 in terms of an opening and closing basis consecutively, or are we seeing them lagging down the way? If we go down that way, then negativity in the market has ensued and we've not managed to structurally take out our previous highs, and things like this looking like it could recover will start to look like the start of a downward movement. Okay, I'm not anticipating that right now. Personally, I'm anticipating getting a bit more upside movement. You can see here again, we're right in the throes of coming across or overtaking the moving average on the RSI. That's nice to see. And once again here on this one, we have some of that hidden bullish divergence with this low. Excellent stuff. Fantastic to see it. And like you can see here, another nice cross on the DMI. Everything's setting up for the next move towards the top side. Therefore, could it be possible to come in with some targets? Not going to give you targets on every single coin, just want to show you how you could do it. If you take it from our most recent highs in terms of a Fibonacci retracement point down to where that stop hunt ended, ask yourself, where does the 1618 come in at? And that's going to be the big target that people are looking to, and that's for this coin at $25, really trying to get back into that Chainlink price territory. But the three targets to be aware of if we are going to be taking our previous highs are 22, 23 and then 25. Bear in mind, our previous highs are actually coming in there at $20, and from where the prices are right now, even though we've recovered quite a bit, even if you were to just trade from where we are up towards our previous highs, you're talking about a 15% increase. Fantastic stuff to be had. Try and manage your risk accordingly. Look into these moving averages and the like to stay on the good side of the market. Other coins you might be interested in are things like CTK. It had a big withdrawal recently in its price action, and we saw similar types of movements in terms of like horrendous downward price action, but then this was followed on by a slow and steady recovery, and then lower lows. Actually, it was followed on by a slow and steady recovery, a significant enough period after the drop down, and then we've never looked back since. Today, V-shaped recovery. Okay, so we have the V here. That's nice to see. Where do our profit taking targets come in at? Bear in mind, you can do all of the analysis I did on the other coins yourself. Looking down below, you can see big negative cross on the DMI in the 4-hour time frame. This is lining up potentially for a big cross if the ADX stays above the 30 zone and the DM positive and negative collide. That would be fantastic. We haven't taken out our structure of our previous areas like we see on some of the other coins, and we're just here positioned and saying, well, what's our upside targets and what's our downside risk? So long as we stay above, for instance, over here, the sort of 188 area, more or less, as we're sat here at $2, then I'm feeling pretty good for the potential for us to go as high as $3.28. That's obviously excruciatingly high compared to where we are right now. You'd be a fool to not look up to the highs. How does this compare to those profits we're talking about with Band? Well, actually, it's quite a good bit higher at a 20% increase. Not exactly, lockstep movement across the board here, but we're seeing a similar pattern to how you might want to trade this. What else might you want to look at? How about DOT, one of the stars of the market recently? How's it been doing? Well, actually, while everything else really had a horrific move recently, and you can see here that all of our previous moves, our trading was fantastic. That's, again, if you ever needed an advertisement to like it and subscribe this channel and come back, hit that notification bell and not miss out on future videos. But what you're looking at here is, of course, a retest of the wedge which we broke out of, having come all the way back down here and really stop hunted the F out of everybody's A. Now we're coming back up the way, and we have done a lot better than what we've seen with other coins in terms of that difference between where we are now and then being very generous here by drawing in from the bottom of the wick of this candle. We're only under 6% away from where we are. Again, a great performer. DOT, fantastic stuff. We are then able to draw in conclusions, or at least potential for looking at where we could go up the way. No surprises for guessing where this could be. $34 as that 1618. What does $34 remind you of, you might be asking? And of course, we have our friend Chainlink in here, currently sat there at $34, having experienced its own pullback down towards 27 recently, and just like DOT, performing very, very well. Where's our next upside target? Well, I actually did full-on analysis for Chainlink earlier on, but let's just kind of conclude this part of the video here by saying that we'll be looking at 45 really as our next one. I'm going to have a broader perspective on this one and point out that the 414 or the 4414 comes in here at $59. Big targets to be had. How are we going to get there in between? Well, first off, are we going to be able to take out our little in between targets? And we have a couple of these lining up with each other ish in here at the lining up here at $41, and that would be nice to see. As you can see here in terms of the DMI, that we have had this cross, but we're not quite on the strength of trend zone on this one yet. Could be about to see that happen. Anyway, I could keep going all day. I think you've got a good idea as to how to manage your risk in and around about these zones and what to look out for. If there's a star of the show in terms of what to look for right now, what could it be? What could it be? I wonder, and I would really like to know what your opinions are. One of them, however, could be VET. What we're seeing here with VeChain is that we've come up very, very high in terms of our body closes. We've already actually managed to make it back up there already today. In terms of the wicks, not quite so much, but that's all good. That's all good. Our upside targets at the minute remain in here at 0.07. That's fantastic. From where we are right now at 56, you're looking at a solid 20% rise up easy with this one if we're able to maintain the upward structure. Well, what are you talking about, Rocky, in terms of upward structure? We've already covered things like the moving averages here, the atomic numbers 8, 18, 36 and 54, for example. But what about this if we draw in the Fibonacci from the real extremely important zone down there at the lows up to the high here, and say that, well, so long as we stay above 52 as an easy to manage risk management zone, we're doing very well. That's the 4-hour time frame, and staying above the yellow 8-period exponential moving average and the 52 zone. Now if we go below that, you're looking for decent re-entries, and what could that be? Well, maybe 40 247 again, maybe where we see this wick having gone down to. And let's be clear, on this one it is performed with regards to precise numbers a little bit better than some of the others, having come down here bang on to the 50% retrace for that stop hunt conclusion. Looking up the way, we have got some magical numbers as well on the bigger, broader perspective. The 414, the 4414 coming in here at 71, lining up nicely with that 1618 more or less zone for our target towards the top side. Maybe that's going to be the star performer over the next couple of days. Who knows? I'm interested in hearing what you think. Leave your comments down below and I'll be sure to read them. And hit that subscribe and like button and come back for some more of this fantastic technical analysis. We do frequently get told here that this community is the best community. Of course, it's all of us telling each other it, because as soon as you join it, you'll never want to leave. Thanks so much for seeing you today, and I'll see you again next time. How about that? What about that? I mean, I might have fallen over myself a little bit when I was looking at the Tezos technical analysis, but I certainly ran through that quite quickly with regards to getting out a lot of the key points that you'd want to have. Things I didn't maybe mention, by the way, are the potential for us to see things like heads and shoulders and stuff on the RSI down below. Maybe worth taking a look out for any of that sort of stuff if you want to. As well, this is going to be a very tentative area for managing risk at, in terms of the 4-hour 8-period exponential moving average. You know, you're going to be finding yourself tripping over that fairly frequently. Think about it in terms of the 24-hour time frame, then you're really only talking about like a 3 or 4 period moving average at that point. You know, a 3-period moving average, right, on the 24-hour time frame, not exactly, you know, worth basing trades off of. If we do jump up towards the 24-hour time frame and you want to know, you know, how are we doing, then let's be clear that even with the stop hunt on the likes of VET, we didn't make it down as far as the 18-period exponential moving average. So plenty of things that didn't make it into the video, you know, overall. And we've just seen this crossing the ADX here. There could be potential more flux on this. I mean, of course there could be. We're up here at a high. We haven't really put in any lows, and I want to point this out as well. If we look across the markets now, my little clip that I made there, all extremely bullish, but let's bear in mind that on the 3-day time frame, that, you know, the red candles are fairly frequent, right? And we've not had one in quite a while. Jumping across these different for VET there, we haven't had one, but as you can see in a lot of the other coins, you know, we have had a red candle at least, but there's areas there where, you know, some of what looks like it's performing really well. Theta, for instance, hasn't had any pullbacks for quite a while, so that's maybe worth pointing out, while some of them have. So I'm talking about operating in lockstep, etc., and maybe with these significant movements, algorithmic ones, then maybe that is the case, but there could be some little differences here or there, as we see some coins that performed better than others performing differently. Now Theta actually is one of the better ones to look at. This is the regular candles. This looks like Heikin-Ashi candles. Let me just show you the Heikin-Ashi candles. This is what this, you know, that's what, you know, this is Heikin-Ashi. This is the regular candles, and it looks like Heikin-Ashi. You know, this is just showing you that this is doing really well. Great stuff on this coin, in terms of where it's got to 350 at the minute. Now again, as well with this, this is drawn in quite roughly. I just missed this area for us. You know, you can see the difference between the 0 and the 786 here. Huge, you know, huge girthy difference here. I mean, looking at these lows, we were down at 36 cents. Now we're up here at $3.60. This is of course 100x in terms of the no, we're down at 3.6 cents, you know, down here at its lows on the 20th of March, you know, March 2020, you know, back from, you know, what we've seen. So we've whatever we've exited up this one, 350 from 3.5 cents. Yeah, we've 100x this coin already to get to where we are. So, you know, that's great and all, and we can see that the range is taking us between almost all. Let me line it up properly. The range over this has taken us, you know, that in the period of a week we could, you know, see this breaking down the way, etc., as we have done, as you know, as we've seen in the past. Let's just see how it goes. Like we saw last time when this happened here, that it took a wee while, but then we did break down, and when it broke down, we got a movement down the way. So just be wary of your risk, you know, because you're looking at a 25% drop off in price once pushing past the 236. If we see that sort of thing happen on a big time frame, these are the sorts of things that didn't make it into the video. They're not going to make it into those little clips that I make. That's fine, you know. Anyway, cool, nice one. Yeah, that's me done, by the way, ladies and gentlemen. I'm going to join you in the chat. Cool. This is my favorite echo chamber, channel on YouTube. Nice. Like that comment. Sean Thomas, knowing what to look for on the smaller time frames to keep from being stopped out. Rocket knowledge. Good one. Absolutely. Alex says, first time I've heard of a stop hunt. Crazy stuff. Yeah, and you can see it. You can see, I think if this is the first time you've heard of it, and I'm showing you, you know, what could potentially be a fantastic textbook example. For instance, on the Tezos chart, I showed you like textbook example of stop hunt now. Also, textbook example of a stop hunt before the market initiated its rise towards the top side. Of course, you know, it's not going to be in the forefront of everybody's trading mind. It's more of a black swan type thing, and of course that's what happened really last night with the price action and the way that it went, you know, and we can see that with these crazy wicks and everything else. So it's not necessarily what's going to be influencing you as a trader necessarily all the time, but it's certainly worth knowing about and then seeing it happen at the time and being able to see a V-shaped recovery, being able to draw in a Fibonacci or whatever method you want to use, because you know, on these lower term time frames, jumping down to the 15-minute here and kind of zooming in on the stop hunt, bringing up hitting auto. So where were we? Theta's actually a bad one to look at for that. Just go to link for a good example of it. You know, we saw that that over here we broke down below all these moving averages, came back up, couldn't make it past them, then wove down the way. Cool, okay. Then we had this recovery, started to look like it was tentative. This is looking like a V-shaped tweezer bottom. Fantastic 2-for-1 good recovery here, right? But of course, in this zone here, you're like thinking, well, I don't know, I mean, it could go either way, it could go either way. But then what you're seeing is this cross of the moving average, the getting confirmation, all of them crossed in at this point here, and we came back down and reconfirmed it, then moved up the way thereafter. And having these bits of knowledge to put together, offering you up decent entries for a move, even if you took a crap entry here at this point, you know, by getting in at the top, then sitting there and watching as the market moved against you 3% down the wave, having been up at 33 and then going back down to 32.5 and thinking, oh, maybe I did the wrong thing. Ultimately, you know, the market moving in your favor because you've identified already a short term, a small time frame, but long enough term, relatively speaking, trend, but you've got like several degrees of confirmation past the point at which where you're able to say, how is this happening and what sort of rationale, RATIONALE or whatever, have we got for this price action that we're now seeing? Is it a valid recovery? Was it maybe a stop hunt where people were looking for liquidity, or is this the capitulation event in the market overall, and will we see further downside? And it's like, then you get the opportunities. And to be honest with you, when you look back in time or whatever, this was one of the best opportunities to get in on moves that we've had for a long time. And I remember reading in the Chainlink, toxic environment, by the way, really horrible place, the Telegram group for Chainlink. It's full of assholes. What am I going to say? It is. Yay! Zone that people were talking about. This is Link talking about buying the dips in these zones over here. And while they're good opportunities and have obviously worked out really, you know, favorably, etc., and all that, and that they're just the market oscillations, low, high, higher, low, higher, high, higher, low, etc., etc., etc. What you're seeing over here is like a huge drop down, having taken out all of these supposedly good entries, you know, all of them, including this one with this wick over here, where potentially you could have gotten at $27 and then ridden it up the way. And from that point, you know, if you've got the best move up, then you're looking at having got a 25% increase in price within 16 hours, right? 25% within 16 hours, like, you don't get much better than that in any market anywhere in the world. Sean Thomas, 15-minute time frame is where the action is at. Well, you know, you get a lot of it on there for sure. Definitely agree with that one. Dan Anthony, Theta's my favorite hold. Oh yeah, we said that already. Rocky, please, where did you learn TA? Is this a degree at university or a certification? I want to pay for a textbook or a workbook to learn more. I'm sorry, my friend. I'm sorry. Okay, so I first got really interested in technical analysis as a child, right? I'm just going to stop your music for a wee bit here, buddy. Where's it playing at? How do you stop this thing? I'll just mute the tab, right? So yeah, I first got into looking at into the idea of stocks and charts and everything else as a child, right? Now I'm not fortunate enough to have somebody who I said this in another episode, who I'm related to, who I have a relationship with, that could tell me anything about it. But I always knew that there was an option, or not an option, that this was a thing, because my uncle worked for Citigroup and was a technical analyst back in the days. Now, I've got no relationship with him at all whatsoever. The guy, I've spoken to him once in the last 4 or 5 years, and then previous to that, maybe once every decade. And the guy hates my guts. Always has, right? Irrationally. I don't know why. I was just a kid growing up. What can I do? I've never, nothing, no contact, nothing at all, right? So essentially I'm not related to anybody, but I have known about it as an idea. And then, as well, as I was in a library as a kid, and this was before I really knew anything. I looked up books about what are the best earning things, and I knew that a broker was a good one. So I didn't know what he did or anything. In fact, when I was that age, he wasn't an analyst. He was, when I was that age and I first looked up jobs that I wanted to have, etc., when I was older, in the library, etc., in a book, in the kids section of the library, in like huge font. He was working for Shell as an electrical engineer, and being sponsored to go and do an MBA, right? So no connection then at all. So I first off wanted it. Then later on I found out that it was a thing that you could do as opposed through analyzing, but it's only just for full disclosure, mentioning that that's a thing, but it's not really a thing. And then I watched like things like, when I was a kid, like watching Rogue Trader, that film about Nick Leeson, and being just fascinated by the whole concept, or American Psycho, and movies of that nature in the 80s, and the Money Zone and everything else. Of course, you know, American Psycho is not the same thing, but just that whole type of culture kind of grabbed my attention. Anyway, that's all besides the point as well. Then I did business at school and uni and everything else, and I went on and got a master's degree, and then I worked in a bank, and I joined to work in the bank as an investment bank, in order to get exposure to analysts and analyzing stuff and trading and everything else. Okay, and in those arenas along the way, for instance, once at the bank, right, I was sat there reading the Financial Times, which is the UK's biggest financial newspaper, right? For what we do, okay? And some guy came along and said something negative to me about it at the time. Anyway, I frequently said on this channel that I hated everybody I worked with, and I've also said as well numerous times that a lot of these so-called experts that are out there in the field are also charlatans who work in the industry themselves at the jobs. You know, that really is hard. So I learned everything I could from all of them at the time, and it was a fair amount to learn. However, I've never been fortunate enough ever to have learned from somebody. What you can find in my history is a consistent train of dedication and desire and hunger to learn this information myself. And in that regard, we're similar, that you want to learn, and you've got that dedication to do it. And hopefully, in some senses, I could be an inspiration for you, and to say that it is possible for you to do this effectively, do it on your own, okay? Although I have had degree elements of exposure to it. So when I was at university, for instance, did I learn anything about this? No, not necessarily, although I learned an awful lot about economics. And I also did economics as well when I was at school as well, and I did it for the entrance exam things that you have to do to get into university, etc. And then when I was at uni, I did various different financial modules along the way towards my towards eventually achieving the master's degree, etc., etc., etc. So all of that helps, okay? But what you're going to find is that But the truth also is that when I was at school, there was an event happened which I really didn't like, because of to do with racism directed towards myself, and I decided I would stop going to school. Okay, and then when I was at uni, so I just stopped going. So what happened was, even though it was against the law, I went to the headmaster and all the rest of it later on that day, and I says, I'm not coming back. Deal with it. I don't care what you do. I'm coming back and I'm doing the exams. And then I did really well in the exams that year. And then I moved over to Scotland, from Ireland, back over to Scotland. And then I went into school, and I says to the guy who was in charge of school, because what I did was I went to a school that my friends were at, and it was a really crap school, right? Really, really, really crap school. And I says to them, my results at the end of the year are probably going to help bring up the average overall. So you're probably going to want to allow me to do the exams and to register and say that I've done everything that I have done, but I'm not coming into school ever. And I negotiated with the headmaster in my first week at school, and I didn't go to school. And then I went to uni, and there's the same sort of thing with TradeSpotting as well there. Then I went to uni and I set up a business. Me and TradeSpotting together set up business and that, and I did entrepreneurial courses and stuff like that. And I says to them all, and the entrepreneurial course was the best one because attendance on it was mandatory. And if you didn't have 90% plus attendance, then you automatically failed. Now I only ever went to one lecture for it. But I went in and negotiated with them, and I said, look, right, I'm not coming in, okay? I'm doing that instead, right? Take it or leave it. I don't care. And all the rest of it. So I never really went to uni, right? And then when it came to working in the place, I hated everybody I worked with. Okay, I hated them all. They were all small-minded arseholes, and while I learned what I could from them, I very rapidly decided that it wasn't, well, a couple of years into, decided this is I'm not going to pursue this any longer, and left that arena as well. Throughout it all, I was trading. So the first time I put on my first trade was around about 20 years old, okay, and I lost it. I've spoken about this in the past. I lost a whole series of trades. I lost money, lost everything, all of that sort of stuff. I've had numerous accounts completely wiped out over the years, and all the rest of it. And really, up until very recently as well, I've also had accounts wiped out. Now, this was slightly different reasons, because I had to go to hospital, and then I was on drugs off my face, unconscious, not allowed to leave, no access to internet and everything else. And when I got out of hospital again, I discovered that my entire savings of my entire life had been completely wiped out. I had to start completely from scratch again, and again, and again, 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 again. Anyway, throughout it all, not one part of it has diminished my desire to do this and to learn this and everything else. So where I learned it from was, in fact, as well, I went along then 3 years ago. It's 2021 now. 4 years ago, I went along to university again to talk to them about whether or not I would benefit from going on and doing their investment management course, and and also about the MBA course, and as well. And I discovered there that I kind of wouldn't benefit from going and learning it, really, given the experience I'd already got from work life and everything else, and everything I'd learned up to that point, and from talking to them. And again, as well, I was going into it and I had to face my own fact, my own sort of reality, is that the chances are that if I joined up to an investment course at university, that I would just stop going to it and spend all day trading instead, right? And then if it was mandatory lectures, then I would just screen share my screen and show, and the guy would be like, okay, this guy's actually doing it, we'll just let him pass anyway, what's the point? And then and at that postgraduate thing, me and the head of the MBA course just got plastered together and had a good time drinking free wine, and then agreed to meet up for coffee occasionally afterwards, and and I didn't look back, and I didn't go to it. Okay, and that's that. So it's not your average, it's not your typical sort of education, if you like, with regards to this thing. I'm a voracious reader. I've read tons of books about trading. I've got a nearly photographic memory, which helps. It's not photographic though, so I'm not going to say that it is, because I don't have a photographic memory. Right? It's not fair. I'm not going to take that as a thing. It's not. But anyway, I've got a pretty good memory, and various things like that have made it somewhat easier for me to do things. But there's other aspects of things. Like, I grew up really liking poetry, and for instance, and I've always had a good command of the English language and understanding nuance. And tacit parts and unspoken things and messages, and being able to compile a story together by looking at the whole and coming up with a holistic understanding of stuff. And I've realized from looking at charts over the years that what you see is little tranches here and there, little sort of cross sections, or a little like as if to say that's the whole of the brain on that cross section you see when somebody slices into it. Well, that's not the whole of the brain, that's just that bit of the brain. There's a lot more to it than that, and that's and I've always had that ability to kind of compile the whole story together. And the same thing happens with charts, that you see there's just this little 15-minute section, or this I'm looking at the hourly chart here. So Crypto's video the other day, where he was talking about when the prices were at 50,000, and he said that the next place the prices are going to is 58,000, and that was happening there and then, right? Even though the prices only exclusively went down after he published it. He then focused in on the 1 hour time frame, and he says, this is what's important right here, is this thing. And it's never that, it's always the whole overall flow of everything, and how each one bit connects to the next bit, because the knee bone connects to the elbow, connects to the nose bone, etc. And there's a whole overall system at play, where and it's understanding that overall flow, and then kind of then choosing certain parts of it to say, well, okay, I will consistently present this information to the audience and help them try and understand the holistic thing in the way that I understand it, and present it to them, and also make it accessible. So while I might blow smoke up my own arse by saying that I've got a good memory, or that I didn't need to go to school or some sort of shit like that, that's not what I'm actually trying to do. I'm trying to say to you that if you dedicate yourself to something, then you will succeed. I don't really believe in intelligence quotients. I think that whole concept is bullshit. I think that that people are almost fundamentally, essentially, equally intelligent, and that Western society likes to have a hierarchy, a pyramid hierarchy, where we like to say that I'm better than you, whether that's because I've got white skin and you've not got white skin, or because I've got a degree and you've not got a degree, or because I earn more money and you don't, or I drive a better car, or I live in a better city, or I've got better whatever. We have got a very much I'm better than you mentality about things, and I think that's absolute bullshit. We all know that human beings only use 3% of their brains at maximum anyway. I genuinely believe that everybody who isn't suffering from some sort of problem like dysphagia or whatever, or hasn't had trauma, be it physical or psychological, who isn't suffering from trauma or indeed intense drug addiction, is equally capable, no matter who they are in the world at all. I mean, for me, what it boils down to is when people say I'm bad at learning languages, and it's like, that's funny because you're saying that to me in English and I can hear you saying it, so it really makes me wonder how bad you could possibly be. You do realize you learned that as a baby without any teacher at all, just by listening to the people around you, and then we get told by people throughout years and years and years that you're not good enough, you're not good enough, you're not good enough. Well, I'm here to tell you that you're just as good as anybody else, and that you can absolutely make it. I 100% believe in every single person that watches this channel to be able to get equally as good as anything that I do, if not better, because you won't be making a YouTube channel every day, so you'll probably have a little bit more time to dedicate towards doing it, and all it takes is dedication. I 100% believe in you, and there's no reason why you can't do it. I think that you probably will, and you'll do it, man. You'll do it yourself. Okay, right. Right. Yeah. Thank you so much, Dan. That's one of the nicest things people have said. I really do appreciate it. Oh, by the way, that message that I've made there, I was kind of answering Sean's question. It does apply to every single last one of you. There's not a single thing limiting you at all. Your success is absolutely uncapped. No ceiling, no glass ceiling. Male, female, young, old. To a certain extent, I don't really know the details of what it is to be really old. I've not looked into it. But I think, up to 66 years old as an arbitrary number, let's call it 76 just to be a bit fair, 86, up to 86 years old, right? You're just as capable as anybody else. I don't believe really until there's actual physical or real psychological or drug addiction problems, etc., that there's anything limiting any single one of you. Don't be told that because you got some, that you don't be told, don't allow anybody to tell you bullshit like you're not good enough, because it's shit, right? It's completely and absolutely lies. If on the other hand, you're dyslexic, I would say even better. You'll probably perform even better. If you have been told your whole life that you're not really that good at maths, you're more a visual person, great. You might even do better than other people. If you've been told that people that you're on the autistic spectrum, you might even do better than other people. I really don't think that the base level, at any base, that there's anything limiting anybody. And the things that you've been told in life are probably not true with regards to your maximum potential, especially if there's something to do with things like how you're more of a musician than you are a scientist or something as incredibly preposterous as that. I absolutely do not believe it in any way whatsoever. There's extremely few things, extremely few things which are limited by age when your brain is that mushy, soft, baby growing thing, right? There's very few. I would go as far as to say that there's none. Right, there's none. There's nothing limiting you. However, I have read books written by people who I respect, like Anders Ericsson, who wrote the book called Peak, that do hint at ideas that you could find it hard to do certain things if you don't learn them immediately, such as perfect pitch, which is to do with hearing, and it's very hard to learn because it's so limited. It's like, how are you going to learn about how to hear perfect pitch? I'm sure somebody could make a course on it and teach people, but it's not out there. And so there's that. If you're interested in anything that I've said and you think I can't take your bullshit word for it, Rocky, is there anything out there in the world that gives you that idea? Then go ahead and read that book, for instance, by called Peak. Very good. That guy is the one that said, this whole idea that it takes 10,000 hours to become an expert in something. That's that guy that said that. He's misquoted. That isn't actually what he said, the 10,000 hours thing. That's besides the point. He jokes about it in his book. That is true. You can become an absolute expert to what people would consider prodigy levels, and it's totally doable. And he proved it. He proved it numerous times. For instance, back when he was coming up with these ideas, he how there's people who can remember stuff, that do memory challenges. Like, I could read you a list of 1,000 numbers and you could repeat them all back to me, for instance, like that. There's perfectly, there's people who remember this. There's people who remember a certain amount of pi, right? When he started his research, it was commonly believed that you couldn't remember more than 12 numbers, like it was maximum, etc., that sort of thing. And through a process of training and helping, he took a random individual, essentially random, and trained them to become the world record number person who could remember more than anybody else, okay? Then he thought to himself, well, there's an argument to be made here that I kind of won the lottery with this person, so I need to repeat it again, right? And do it again. Okay, and he did with another person, and proved beyond any reasonable doubt that it's absolutely possible to completely and absolutely supersede all and every expectation that anybody has ever put on you ever about your limits as a human being and your capacity. So who's going to do it? You're going to do it. How are you going to do it? You're going to do it by being dedicated and actually doing deliberate practice over a period of time. Having the ability to actually learn is key. Learning how to learn is the only thing you really need to dedicate any time to learning. After that, everything will take care of itself. I believe in you. You can do it, and I'm really glad to be a part of that journey, you know, and helping to inspire people. Okay, so remember that, everybody. It's absolutely true. I guarantee you, 100%. Okay. So scrolling back up the way, what have people been chatting about? Sledge, I see you asked me questions. Rocky, please, where did you learn TA? Oh, it was you that asked me. Sorry, Sledge, I thought it was Sean. Anyway, answered that one. I think a little bit, maybe more than you'd bargained for there with that one. There's probably a movie here somewhere. Just got to throw in a few hookers and cocaine, and it's ready for Hollywood. Yeah, let's do it. Let's do it. There definitely is. In fact, though, let's not diminish the value of all of your existences. Every single one of you has got wonderful, interesting stories to tell. I experience that on a daily basis with every single person I talk to. I'm fascinated by the backgrounds that all of you have got. You know, it's amazing when you take the time to learn about somebody as an individual and you give them the opportunity to express themselves. Then you'll always be amazed. I think everybody, I'm sure there's amazing stuff there yourself that we could learn about. Thank you, Rocky. I have a bachelor's in business and work on database management for loans at my work, but I found my true passion in TA. Fantastic. I want to change my career to a role that lets me study this at work as well. So I save hours out of my day. I spent 8+ hours every day for a year studying news and follow YouTube personalities. Learning pieces of TA on YouTube, but the math of it is still vague without a one-on-one mentor or a workbook to prove I'm understanding it the right way. After losing, this is great. This is great. So this is what I mean. Everybody's got a great story. This guy, great story right here, right now. We're all getting the benefit of it. And it gets better. I can already see here from looking at it. Right? Okay. It gets better. After losing 90% of my portfolio and holding in there, I have gained it back, and plus almost a year's salary from what little I've learned. But I want to make sure I capture the success and stay as intelligent as possible. So work is more important than a school, or are books the best resource? Whoa, that's a tough one. I would say that by being here, you're getting, you're surrounding yourself with the right background music. Okay, you're in an environment where someone, in this instance it's me, is telling you that you will succeed and showing you that confidence in you, and I believe in you. Okay, so that's a good thing. That's number one. It's good, and that's a lot of what you get out of a mentor. A lot. Right there. So yeah. Secondly, while the maths of these things is important and fascinating, it's available and it's also poorly understood. Go ahead and read stuff about, if you're interested in it. Well, actually, you know, for instance, my two favorite indicators, probably, or two of my favorite indicators, are the DMI here, right? This here, DMI. And by the way, for anybody who's interested, you can get a copy of this. Go to gumroad.com, gumroad.com/rocky.outcrop in the description for a link of that. This is a standard DMI, but it's got my artistry on top to make it better. Okay, essentially. I've changed it very visually using I've coded it out, written out the code to make this better visually. But at the guts of it is the same sort of thing. If you want, the guy that made this and the RSI, this is the RSI again, different to their standard one. I've changed it as well to use an exponential moving average rather than a standard one or any of that sort of stuff. This is my own creation, but again, lots of people use this. I didn't invent this at all, or even really the styling that we're seeing here. I didn't invent it, but I customized it in terms of the positions of things to make it so it was better, I think, for crypto, whatever. These were both made by a guy called J. Wells Wilder Jr., and he was a mathematician. So if you're interested in the maths behind these things, he explains in extreme detail all about them. In fact, if you want to see some of what it's about, I have a video on my channel in the education playlist called the DMI, explaining the DMI, something about like how to use the DMI. I don't really know. It's in my education playlist, and on the thumbnail for it, the letters DMI are very large. You'll see it in there, right? And I open up his book, and we talk about the maths in there for how that's calculated. And you'll get an idea of that, and you can go ahead and read the book that I'm talking about. New Concepts in Technical Analysis is what the book's called. You should enjoy that. You will enjoy that, right? Okay. So then you'll know more about the maths of it and stuff like that. And now, does that book make it a good resource or not? Well, books are two-dimensional and stale, and they don't communicate two ways. It's just you just have to listen, and you don't get to ask questions and everything else, right? However, there are some really good ones. The problem with books is that there's also a shit ton of really crap ones, okay? Really, really crap ones. Now, one of the best trading books I've ever read, and one of the worst trading books at once, wrapped up into the one package, that's unfair, because it's nowhere near the worst. That was just me being a bit facetious there, actually, to be honest with you. One of the best trading books I've ever read is called The Way of the Turtle. Very, very interesting stuff. You'll enjoy it. And that's maybe worth reading. And again, in there, you'll find a discussion of some maths and that sort of stuff as well. You might find that good. Now, is it a good resource or not? It's hard to say. Now, that's a good book and a bad book at once. You know, whatever. Worth reading. The best book for reading if you're wanting to learn about trading and you want to have a good time reading it, for sure, is Reminiscences of a Stock Operator. The best book for like having the right mentality for trading, which is 50% of the battle, let's be honest, is Trading in the Zone. Mark Douglas also wrote The Disciplined Trader, but Trading in the Zone is like the Disciplined Trader 2.0, so you just read Trading in the Zone and you're fine. You can go ahead and read it. Don't let me put you off reading both, but you can skip the Disciplined Trader. They're very, very, very good resources, right? But you'll also find tons of shite out there. Now, another resource for you is academic articles. Now, it's hard to get access to them when you're not at university or whatever, but reading academic articles is also really good. Now, it's becoming less and less and less popular for people to be doing that sort of thing, but you get good information from them. But what you'll always find, almost always, is that people have this sort of belief that you're trying to predict the market. And that's wrong. You know, you're not trying to predict the market. All you're trying to do is outline the risk. You know, you're just trying to outline the risk. You're just trying to outline the risk there that you have on it. Now, when you are approaching a roundabout in a car, driving the car, you're making decisions very, very quickly, and you're basing them off of certain indications. Now, you don't necessarily predict what the cars are going to do. What you actually kind of do, well, at least what I do, and I think what safe drivers do, is go up to the roundabout and you make a risk assessment of the other participants at the roundabout. You assess the risk. You don't sit there and look at the car on the right or the left or whatever, depending on what country you're in, and say that person is going to do this or that. No, you don't. You look at the direction of their wheels, you look at their hands, and you look at the driver in the car. I mean, this all happens incredibly quickly. What way is the driver looking? You know, what speed is the car going at? Is it speeding up? Is it slowing down? Etc. 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 And the end result is a risk assessment which says to me, you're 99% okay. If you go onto the roundabout, you'll probably not get smashed by the other car. You don't actually sit there and say, I predict that car is going to stop, or I predict that car is going to move. You look at all of the 100 different factors, and and you make a risk assessment. Now, when you first start learning to drive, it's pretty tough to do that, and people struggle with roundabouts. And like there are no roundabouts in America. Well, there's like 5. So you know, it depends as well what country you're in. You might not even get this analogy at all. However, if you've looked at that, if you've looked at those these videos you see of Indians on roundabouts, you know, like Indian roundabout, okay. These guys aren't making predictions about where everybody else is going. They're simply able to kind of fairly quickly assess the risk at any movement that they're likely to take. Now, that's what you're trying to do when you're trading, okay? You're not actually trying to get to the point where you're able to predict the future. So let's just skip into this a bit and hope that it works. So these guys on the roundabout, they're not coming up here and predicting where the other cars are going to go. At this particular moment in time, this motorbike is looking at this thing, and he's not trying to predict exactly where he's going to go. He's trying to make a risk assessment of what's going to happen. What's the risk assessment? And that's all you're really trying to do, because it would be impossible to fully make the assessment. Now, here, we're about to see a car come up and slow down dramatically on the roundabout, and the car behind cannot predict that the car in front will do that. He cannot predict it. However, he can assess the risk of anything like this happening at any given time, and he's therefore able to approach his own driving in a way that makes accommodation for any given risk. Watching here, you can see a white car enters the screen and stops, and the car behind then accommodated that happening. Now, he didn't predict the car in front slowing down. He made the assessment of the risk. The car in front didn't predict that the driver would come across in a straight line. The motorbike here would come across in a straight line and force him to stop. In a second, you'll see it here. You know, this here. He didn't predict that this would happen, but he made a risk assessment approaching it, and all of it happens so quickly and it happens smoother. Now, if every single person that was entering this roundabout had to make predictions about what everybody else was going to do, and not only that, but those predictions had to be correct, and if they weren't correct, they'd die, then nothing would ever happen, and you'd have a country like America that has no roundabouts in it. Instead, you see stuff like this here, and really, I think my point is fairly clear. Now, you're free to disagree with me and say, no, the people on here, they're making a rapid series of predictions about what everybody else is doing. I would disagree. I would say that the people in this video are making rapid risk assessments because it's the best you can possibly do. And that is trading, okay? And that's what to aspire for. That's my opinion. I don't know how useful that was at all, but hopefully that's interesting for people reading that or watching that, okay? Now just catching up with the chat here as well. Let's see. Drew's Tech, well said, Rocky. Thank you so much for that. Really do appreciate votes of confidence. Sean Thomas says, amazing the things I've self-taught or researched the shit out of till I got it. Sky is the limit if you want something. Figure out what it's going to take to get there, to have that, to do that, etc. Perfect, right? Thank you for the vote of confidence in what I was saying there, Sean. I really do appreciate it. Thanks, Rocky. Let's change our lives and better our communities. Fantastic. Yes, couldn't agree more. Really do appreciate that sentiment. That's exactly it. The Dead Monkey All-Stars says, oh, it's All-Stars instead of Alistair. Sorry, I read your name wrong early on. Dead Monkey All-Stars. What a pep talk to get back to. Fantastic. That's fantastic. I'm super happy that you thought it was a good pep talk. Learning how to learn. Wow, that's profound. Thank you, Dan. Really do appreciate it. And Dan, superstar as he is, the only guy who's contributed to the channel so far. By the way, don't want to like pressurize anybody and all the rest of it. That's not what I'm all about. But Dan, superstar, he's the guy. And again, Tony, Sean, if you're watching, that's not a call on you. Or Michael John Scott, that's not me calling on you to do it. Just telling everybody, I'm out here putting this information out here for the betterment of all, with a plan. You know, I think a fair enough plan to make it so that this is actually compensates me nicely. I think that while I'm not making a comparison between myself and anybody else at all, that when I look to Mitch Ray making over $2 million a year from Patreon donations now at this stage, okay, and in every live show that he does, getting thousands upon thousands of dollars donated to him. When I look at Crypto, who just doesn't even read the chat, doesn't read it at all, he just speaks like he's like super fast, 100 miles an hour at the camera, with no intention of reading anybody's comments, getting donated thousands of dollars on every live stream. I think that's what I'm looking for. So anyway, Dan, sorry, fantastic, really do appreciate it. The reason I said Drew, by the way, for anybody wondering, is because Drew was the previous one to donate to the channel before then. Yeah, Stanley Knife, I started reading Trading Technical Analysis Masterclass, Master the Financial Markets. The last book I read before this was the fantastic Mr. Fox, and I'm 40. Funniest comment of the day goes to Stanley Knife. That was hilarious. Last 3-year hobby was gold recovery from electronics. Wow, cool. 3 ounce a year free, except time pickup and teardown. Now crypto market with less work. Fantastic. That's brilliant. That's brilliant. That's like getting, at the current rates, that's like getting $7,000 or something like that a year. Not bad, right? For just recovering some gold out of free electronics. I mean, wow, that's cool. If only there was a quick way of doing it. Rocky had fantastic Mr. Fox as a baby. You have a lot in common. There we go. Yeah, kindred spirits right there. Sean Thomas says, who let the bulls out? I take the micro gold out of TVs, tea kettles, and phones too. Wow, there we go. Great. Wow, fantastic. Michael John Scott says, Rocky, I truly believe that if you apply yourself, study, and practice, then you could achieve the levels of special human beings, such as Paris Hilton and Lindsay Lohan. And fail wink to go along with it. Nice one. I agree. Who let the bulls out? Embrace the risk, then manage the risk. Yep, cool. Then it be cool. Nice one. Excellent stuff. What else are we seeing here? I mean, I'm color blind and these colors are perfect for me. Figured he could be lol. No, I'm not colorblind, but I do appreciate that, by the way. I appreciate that. That's fantastic, and I'm really glad. Really glad. Fantastic. That's good to know. Thank you. Cool. That's good to know. And I'll keep them that way. I can't claim I did that on purpose. I can't. But I can't claim I did that on purpose. But I have been aware always that red and green is inappropriate for colorblind people. It wasn't what inspired me to change the charts directly. I have always been aware of it. I've thought about it 1,000 times how laughable it is that the out of the box colors on TradingView and everywhere else are red and green, and that, I just thought it's so funny that we're also red and green all the time and whatever. Anyway, that's good stuff. It's funny. Navanethan, we got him here in Canada for sure. Yeah, cool. Yeah, Canadians know about roundabouts, that's for sure. There are a free audio version on YouTube of Trading in the Zone by Mark Douglas. There you go. Tip for everybody. Free audio version of Trading in the Zone. That makes it very, very easy. It's not that we don't have roundabouts, they just can't comprehend how they're supposed to work. I know. I've been on like a handful of America's only roundabouts, right? And some of them have got concrete some of them have got concrete safety things, right? Pushing you around. Nice one. Don't worry, USA new press secretary's got the roundabout thing covered. Circling back is second nature now. Nice one. Well, roundabouts work better for ox carts than Lambos. Yeah. Yeah. Sean Thomas, from gold to digital gold. That's right. Yeah, exactly. We're all in the digital gold business now, stripping down, trying to get the wee bits, recovering wee bits here and there, managing our risk appropriately, and all the rest of it. No pauses, staying on topic, and just spouting keywords non-stop is how all the YouTube algorithm currently is. It's all about filling that closed caption with clear, concise thing. The transcription of the audio is key. I want to say color deficiency is prevalent in like 1 out of 6 males. Really? That much? Really? Wow. I can't remember which is when it's black and white. I can't remember which is which when it's black and white. I can't remember. Yeah. occasionally, by the way, I've done stuff in the past where I've made it so it's all grey, you know, just all grey, everything grey, because ultimately, what difference does it make, right? What difference does it really make? Really? It does make a difference. I guess it's the quick answer to that one. It does make a difference, but it's easier to discover that when you make it all grey. It only makes a slight difference. The volume, for instance, is a really great one to just have all one color. Shout out to Eric Crown for doing that. He's actually one of the only people in the world I've seen who does that on a regular basis. I don't know if he's doing that right now or not, or whatever. I used to have it all grey on the channel here as well, because the fact that this is red and this is green or whatever is purely based on what the candle up above did, whereas it kind of makes you think that there's less sell-in volume, etc., when what actually determines the price is the price that people are willing to sell at. Hence gaps on charts, etc., and stuff like that. So within, you know, on this 15-minute time frame, that's not likely to be the case. But if you look at different charts and you see gaps up and down everywhere else, and then you see that then you go up to a bigger time frame and it just kind of smooths it out, and you see complete candles that are connecting, then you think to yourself, well, hey, hold on a second. It was what made this happen was whatever else. Anyways, also sometimes you also see little funny things like red candles that are above the price action, right, after a gap, for instance, or if the prices gap up, etc., and then come down the way. So you've got the previous candle is green, the latest candle is red, it's up above, it also closes higher, and then all the candles, you know, is kind of like giving you an impression of something which may or may not be worthwhile having. Of course, it's up to you to decide what's the case on that one. You know, Coco or Chocobo, I'm gonna have to try and read your name now. Chocobo Coco. I mean, it's not that we can't see red or green, just certain shades will look the same. It's all about contrast. To high contrast greens, high contrast reds are better than darker. Absolutely. But having said that, are you aware that in fact there is a very, very, very real phenomenon when it comes to being able to identify colors? Now, there's people who grow up in Africa, in and around about the Serengeti. The Serengeti, by the way, are Serengeti means grasslands in Swahili. The grasslands of Africa have got fantastic variety of grass. Now, grass, by the way, wheat is a grass, rice is a grass, grass is a grass, whatever. There's lots of different types of grass out there, okay? And there's lots of different colors. And the difference, when we see a picture of Africa, we can like look at it and think that kind of goes from being kind of greeny to kind of a yellowy green, but there's three colors on the screen. You'd be like green and yellow. and there's a couple of different shades of green, but whatever. But for a lot of people there, show them a chart of different greens that we can't tell the difference between, and they can identify all the different shades of color. However, show them a chart with red and purple and orange and various colors that we're used to, which don't exist commonly in nature. However, we're so exposed to them because of our artificial lives that we live, you know, essentially, then they can't see those colors. There's an amazing phenomenon. Check it out. Look up the research for it. It's really, 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 really interesting. Lee Wallace is a grass. Aye, pass it on. I see the outlines way better than the color. Evolutionary advantage, I see better through camouflage. Well, I mean, you maybe already know, and you sound like you're interested in this sort of a thing. So if you don't know about that, check it out. It's highly interesting. And I learned about it while studying psychology. There was a time in my life when I wanted to be a psychologist. I still frequently think to myself that maybe I should become a lawyer. I still think it frequently, even though to become a lawyer, you have to go and work for somebody else for a year, which really puts me off the idea of becoming a lawyer. They can't just go and get a law degree. Oh, if you can in America, let me know. Hey, that might be interesting. However, in this country, you want to become a lawyer, you have to then go and then work for somebody else, and it's just part of the sort of the process you need to go and do. Sucks balls, right? Anyway, I guess maybe there's probably a lot to be learned by working for somebody else in a law firm. Anyway, I frequently think to myself, really do, that I could really help with being a lawyer. If anybody's watched Making a Murderer, for instance, and then you watch the second season of Making a Murderer, and you see the pathetic attempt, that the trial lawyer did at defending or appealing on behalf of the nephew in that case, and how awful it was. You know, that sort of a thing inspires me to go and try and be a lawyer as well. So that's something, you know, maybe one day I'll drop everything that I'm doing here and just go and do that, because the change that you can affect, this is again, it is like trying to be have positive change in people's lives, and the way that I do it, as I say, and not into clickbait here, and I'm happy to have this intimate session that we're having here. The way that I do it is by thinking that if you can help the one person that's in front of you, that is good enough. And as a lawyer, you can certainly achieve that. A healthy human eye has 3 types of cone cells. Each can register about 100 different color shades. Most researchers ballpark the number of colors we can distinguish at around 1 million. Wow. Chocobo Coco says, I see, that was Alex who said the previous one. Chocobo Coco says, I see a wider range of green, lesser range of reds. Fantastic. Super interesting. Super interesting. Same thing you're talking about. Oh, my camera thing just died. That's cool. Is my stream still working? I think the picture of me is frozen. That's cool. It can just stay frozen on the screen there. That's fine. Oh, it's disappeared. So that's that. I guess that is Brendan yeah. First time round, Brendan Dassey, that's it. Shameful crook, absolutely. Second time around, not shameful crook at all, and really well-meaning person and everything. But at the same time, you know, did a really crap job. Really crap. Right, yeah, anyway, I think my camera dying says to me that it is about time that I tuned out. I'm really pleased to see at the end of this live stream I've got 42 likes. That's fantastic. That's quite a high number for me with live streams. Really do appreciate everybody who's tuned in today. And what we do at the end of these shows, if you are just joining me, and I do see some unfamiliar names here, so you know, that's cool, is I run through a reverse roll call, and what I do is I give a shout out to everybody that's in the last 200 messages. I can see 200 messages on my YouTube back end in the live chat bit, you know, where I would respond to you guys as I'm doing my stream. I can see 200 messages, so I can scroll up there and give every single person who said anything to me in the last, wee while, a shout out, okay? And I'm going to bring up the final scene screen. Sorry about that. Aha, you must have thought I'd gone. In fact, some of you probably did tune out. The reason for that is because of reasons. There's reasons, okay? Reasons for that. Instead of going to the final scene thing, I'll just put on. Is there still no audio, or is there audio here? I'm looking for the audio on my Streamlabs. Aye, we've got audio now again. Good. Yes. Thank you for that. Yes. Oh, you're uploading your video. Brilliant. Okay, everybody, I'll just give a shout out to TradeSpot on here. Doodle-doo. Trade spotting. Trade spotting. That's how you spell it. This is how you search it. This is how you find the channel. Trade spotting. You're the second. Trade. That's not how you spell it. Trade spotting. Spelt it wrong. Embarrassed myself. Trade spotting. There we go. This is his channel. He's got great videos on it. Come along, give him a like, hit the subscribe button, click that notification bell, hit all the rest of it. You'll get all notifications when you're at it. Do it on my channel too, and that's definitely worth a shout out. Worth a shout out to him. By the way, you'll be interested. Maybe you're interested in knowing who I follow and who I care about most, etc. on this list of people I follow. TradeSpotting right up there at the top, probably the #1 person I like. Next on here that I think is great to know about is Crown's Crypto Cave. Magic Internet Money, good one. Elio Trades, nice guy. The Moon, he does really well for a Russian 5-year-old, so fantastic. We have Chart Champions. I've not watched any of his videos in months and months. But Daniel, he comes across like an asshole. Okay, he does, right? He comes across like an asshole, but he's actually a nice guy. I like him. I just know that a lot of people find his personality abrasive. In the same way that Crown's Crypto Cave, you know, Eric Crown comes across as a bit of an asshole sometimes, but I think he's a really nice guy. I really like him. AB Lopez, lovely guy, subscriber here, one of the Spanner crowd. He's not been around for a wee while. Hope he's all right. Then who else is there worth giving a shout out to? There is, like, my dad's on that list, for instance, but I'll not do that right now. Martini guy, really nice guy as well. Anyway, check out TradeSpotting, and why not check out Kelly Stamps? She gets subscribers at a rate roughly around about 1,000 times faster than I do, which is interesting. Woo, look at that price action. Okay, so I'm going to need to add a scene to this so that I can roll the credits on the end screen here for me, and I'll do the reverse roll call. Right now, TradeSpotting's uploading a video which people might want to know about, so there you go. That's why I give him a shout out. And let me just roll the roll credits again here and give a shout out to everybody. Yeah, so like I was saying as well, I love these intimate sessions and all that good stuff, but I won't be doing the technical analysis like this forever for free. You know, it's just too much. Did a Streamlabs come through from me? I tried a buzz beater at 236. Did you really? Let me just check my note. I didn't see anything, mate. No. Yeah, that's right. Brilliant. But you'll notice here that, oh, you're on the... Yes, you're on there. You're on there. You're on there. But I didn't see the notification. What's that all about? Let me just roll it again here. There. Ooh, let the bulls out. Yeah. Boo, 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 doo. Yeah, fantastic stuff. Now, as well, I want everybody to know I'm not yapping here trying to scrounge for money. I'm just telling people frequently, all the time here, until such times as you know, until the end of the year, what the targets are. I don't really want to go about this in a way where I do I go sort of extreme on clickbait or whatever, but of course we could do that. It's a choice. We're still a million miles away from needing to do any of that sort of stuff to benefit the channel, so we'll not worry about it too much. Anyway, yeah, cool, fantastic. So I super appreciate Who Let the Bulls Out and Dan for having made it so that I am that bit more likely to be doing this video, you know, to be doing these videos this time next year, etc, etc. I also have a little bit of news here at the end of the show to tell people, so for all the ones that have tuned out so far, I wonder how many of them there are. for everybody who's tuned out so far, it's funny. Let's see, 13 concurrent viewers, 14 concurrent viewers, yeah. So the ones that left already, they don't get to find this out. Lols, that's a good laugh. But I'm actually going to start a trading signals thing, okay? It's going to be a paid group. I know what you're thinking, because I think the same thing myself. However, there's going to be a couple of differences here. For instance, one difference is that I am only doing this by demand, okay? It's been asked of me, and that isn't some bullshit, right? It's not some bullshit like you see on other channels probably where they're like, oh yeah, people really wanted it or something. I don't know. That's legitimate. It's a legitimate thing there that, you know, I'm only doing it because of demand. Second thing about it is that I am basing the price of it all on what people say, etc. in there, and also I am yeah, I'm basing the price of it on what people say, so it's going to be like, you know, it's market orientated, it's all like that. Now you'll be wondering, but Rocky, how can you base it based on the price of things? Well, quite simply, this, my friends, is that I will be running it as an open beta until such times as I've decided to make it private. So what I'm thinking is that I'll probably run it as an open beta for 2 weeks, 3 weeks, whatever it is I decide to do, I don't know. And then after that I'll make it, or a month or whatever, who knows, I'm not decided yet. This is all very much in the early stages of the, you know, the planning phase as opposed to the action phase, but I'll be running it as an open beta. So if you've always thought to yourself, oh, I could really do with access to a trading signals group where someone will tell me specifically where to get in and out of trades at blah blah blah, then I'll be launching my own one. Now, another thing about this is that I'm not making any guarantees to keep it going forever, okay? It's just something that I'll be trying for a wee while and see how it goes, you know? It could even be that at the end of the open beta phase I decide that I just don't even want to do it, whatever. I'm 100% about integrity. I hate cutting people off at the knees by preventing them from learning, by handing them the answers. I'm all about teaching a man to wage war against the fish, never mind be able to feed his family or any of that sort of stuff. I want people to be able to go out there and be a super soldier, getting inserted behind enemy lines against the fish, you know, and really destroying them. Sun Tzu, sort of super proud of you and all that sort of stuff. Anyway, that's what I'm doing, so that's a bit of news for you. I haven't I looked up the name for my crypto, decided that it was not going to work for me, that name, so I've still not decided on how to go about that. So anyway, looking for people who are interested in running cryptocurrencies and everything else to get in touch if you fancy, you know, if you've got some sort of skills that you'd like to lend towards the endeavor in terms of running a cryptocurrency. So there's that. And also I'm looking to rebrand the channel as well. I'm going to have new logos and color and everything else, keep it all on point and all that. So if you've got anything that you'd like to contribute in terms of that front, also get in touch with me. And that's that. So let me just jump over to the chat, or bring up the chat again on my screen so I can see it, and I can do a reverse roll call. Just make sure, just see what people are thinking. Long sesh, man, when was that? I'll rewind. I don't know. You arrested Lee Wallace as a grass pants. Pass it on. By the way, everybody watching, Lee Wallace is a grass, okay? He is a grass. Everybody should know that. Now you know it. Doesn't matter that you don't know who Lee Wallace is. Just remember, he's a grass, okay? And that's that sorted. We've covered that off. And yeah, right, let me just run through the reverse roll call. Trades button, as ever, fantastic to have you here. Really do appreciate it. Always reliable, fantastic guy, and he's just produced his own video. He's putting that up on YouTube at the minute, so that's good. 45 new likes, that's a new record. It says 44 on my screen. Maybe someone liked it so much they hit it twice. K-Doc, thank you so much for tuning in. That's right, I'm hungry. I'm now talking with my mouth full. The things I get away with when the camera's not pointed at me. Oh my god. Who let the bulls out? Once again, really appreciate you being a part of the musical background of today's show. For anybody who's interested who makes music out there, by the way, I quite like lo-fi beats, type, you know, lo-fi sort of stuff that's chill that I can put on in the background, and it won't distract me very much or anything like that. and of course tracks that last for 3-4 hours long. Okay, so not very many of that, bit of a niche thing, but there you go. What I'm saying there is that if anybody wants to make music for the channel, they're more than welcome to. I would love to share their music. Who else did we have here? Drew's Tech, great guy. I gave you a shout out earlier on, by the way, because you're a fantastic dude. Will you be in the outro? Actually, you should be, because you weren't in the outro last time, right? So let me just get you on this. Let me just get this. Hold on a second. This was the donation that Drew's Tech put in. So is that going to show up? Are you going to show up in the outro now? Now maybe I need to stop the credits and roll them again. I want you in it. Okay. What the hell? What other YouTube channel is like this? I don't know. Can we keep it going? Can I always be so I mean, is this possible to scale this up to be big? Let's see. Buddy, I can't get it. I replayed it and it's not showing up. So that's annoying as. I'm disappointed about that too, by the way. Drew's Tech, good example of reactive versus predictive probabilities, Rocky. I've never been that good at prediction, but I find it easier to react to the market direction on the fly. Scalping is most of my trades. There we go, that's fantastic. Thank you for that, by the way, Drew's Tech, earlier on. Good comment. The shout out to the Dead Money All-Stars. Fantastic to have you here, by the way. I don't know if I recognize you, but you might have subscribed to the channel ages ago. Whatever. Alex, you've seen you around a couple of times and you're back again. Fantastic to know that I've caught your attention and you're willing to come back and be a part of the community. Fantastic, that's brilliant. Chocobo, Coco. Love your name. Fantastic to have you here. I hope to see you in the next live stream. That'll be Wednesday, by the way, for everybody interested. Who let the bulls out? Yeah, once again, thanks for your music. Limited time. I can't remember which is which when it's black and white, you said earlier on, having a good joke. Thank you for that contribution to the chat. It was on point and interesting and funny. And of course, you're welcome back all the time. Thank you for being a part of the show today. Nav and Ethan, fantastic for being here. Really do appreciate you, as well as everybody else as well. Yeah, but we were talking earlier on. Navin Ethan, really great guy. Love his name, love his personality. Worth being a friend. I don't know if he's got capacity. I'm sure he's got a few free slots left on his friends list. If you want to get involved in being Navin Ethan's friend, he's well worth it. Zoner, he's a good guy as well. Love you being part of these crazy live streams. Thank you very much. You were the one that pointed out earlier on that there is a free audiobook version of Trading in the Zone by Mark Douglas on YouTube. There, everybody can go and look that up and enjoy it. Michael John Scott, or of course for Micah, as he's known to his friends, or John, if you're on your way to being his friend. John, for Micah, thank you so much for tuning in. Really do appreciate you. And I agree. I think that if we all apply ourselves hard enough, we can become special humans like Paris Hilton. I agree. Who else did we have here? Sean Thomas, man, you're a good friend of mine too now. Really do appreciate you being here, and again for for sharing your chat about gold and your experience of learning and talking about stuff. I appreciate that a lot. Here we have the Stanley Knife as well, who came along early on to say inspiring stuff. I really do appreciate that. I hope that was helpful for people. Nice bit of chit chat that we had during the show. Dan Anthony, the guy that's making a big appearance here on the credits there. You'll see that super chats. Dan Anthony, great stuff, fantastic. Thank you for tuning in today. Really do appreciate your involvement. You were really surprised to find the quality of the stuff that we've got here, so that's fantastic. Hopefully you'll share it with your friends as well. Of course, I am the best kept secret on YouTube. A lot of people don't want to share me with their friends because they'd rather keep all the money for themselves. I understand that, but it would be cool if you did share it because your friends would appreciate it, I'm sure, and I'd appreciate meeting your friends. Sledge, the guy that got me off on a tangent where he asked about where I learned TA. Really do appreciate you tuning in here and sharing your own experience. You lost 90% of your investment capital, then you made it all back again, and more than, having got a whole year's salary on top of what you had first invested. My goodness, you must be feeling a lot more positive than you were back in the day. Scrolling on up the way, we also had 3000 Trin. Tony Wright, Fantastic. Tony Wright's a great guy as well. 3000 Trend, great guy. We also had K-Doc. K-Doc was, I think, already got a shout out, but there you go. We also had, scrolling on up, Always Learning. Good guy. Been chatting to him in the Discord recently. We've also got Peter Hure, who came in, shared a bit of experience. Third touch on a 4 hour is more accurate. Absolutely is as well. We discussed that. And as well, you know, a couple of other ideas to look out for when you're looking at charts in and around about those sorts of ideas, you know, rather than just basing it off of one thing alone. And with that, I believe I've mentioned everybody here. Peter Hure is a really great guy, by the way. I know you can't be friends with everybody, but I'm glad I got him as my friend. Harsh, yes, Harsh. It's nice to have you back again, my friend. Harsh is short for something as well, by the way, like Harsh Shadavian or something. Great name, good guy, friends with me. Gave me tips on, you know, tags for my YouTube videos and stuff like that in the past. And nice guy. And that is everybody. Okay, so scrolling back down to the very end, just to make sure I didn't miss anybody. And yeah, let me just see. You said for the Patreon. I mean, I don't. Oh, for the Patreon. Oh, right. Because I changed my credits thing to say something about Patreon in it, didn't it? Please be like Julian Benilla and Joel, the legend that is Trey Patreon. Trey, do you want to be in that section? Drew, is that what you're saying, by the way? Because absolutely you can be. I want you to be on it as well. I don't think that this credit rolling thing is very good for the end. Instead, I should come up with a decent list of people who have done it. In fact, for everybody who does Patreon, let me know if you want your name to appear on here or not, or indeed if you want it to be a shout out for somebody else. I mean, maybe you do Patreon but you want to have your girlfriend's name appear at the end of the show, something like that. Let me know what it is and I'll start to put together a little thing to show up somewhere here at the end of the live shows where you can see all that stuff. Yeah, cool, right. And then just checking in here with the very end of the chat, Nav and Ethan, thank you Rocky and everybody. Big hearts from Amp to work on the Rocky rebrand. Yes, Nav and Ethan's taking part in that, by the way. I'm happy to take suggestions and that from everybody. Of course, not everybody's suggestions will make it in there, and of course as well, I trust Nav and Ethan's got a good eye as well, and all the rest of it. But I'm absolutely, you know, really want feedback, and you never know who's out there listening. It could be that like the next Leonardo da Vinci's tuned in right now, for instance. That would be cool. Drew's is fine. Yeah, sweet. So I'll put Drew's in there. I'll put you in now, by the way, for that bit, because we're talking here, right? But I need to do that Patreon thing properly, where it's done properly. I need to do it properly. But there you go, Drews, man. Way. And then to the last but not least, by the way, Mike Fernaggi. Is that right? Or Fernassi? Or is it Fernays? Honestly, names are the worst, aren't they? I can say Mike, no problem though. Good stuff, Rocky. Really appreciate the content and community. Can't wait to see it grow. Totally, thank you. And I really do, you know, wish you all the best. Put the blessings back to you. I'll send you some positive vibes. I do that to people, by the way. I'm not religious at all in any way. By the way, thank you, Dead Money All Stars, that you're in on the Patreon next month. Thank you so much for that. Really do appreciate. You know, everybody who wants to help support the channel. Keep me going until next. You know, keep me going throughout the years. It's going to be fantastic. For the final 8 concurrent viewers, a little bit of insight, and you've made it here to the very, very end. I am not religious, but whether or not that makes a difference, I still take part in religious-y type things or spiritual type things. So I proactively, frequently send out positive vibes to people in the community. Okay, I do. I properly do. So, so even though I don't believe in the power of prayer, or whatever, personally, and I've got all respect for people who are religious and do believe in the power of prayer, and it's totally, massive respect to all of you out there, whatever your religion is, whatever you believe, it's totally fine by me. And although some of you who have that religion, you might even think that I'm saying something sinful for saying that I do this type of behavior. Well, to you, I don't know, screw you, I guess. But for everybody else, I send out positive vibes. Okay, positive vibes. Genuinely think about it. I think about your name. I imagine a scenario with you in it where you're being successful or happy, and I actually hope that happens, and I send those vibes out there. Whether or not it has any effect whatsoever in the world is for you to decide. I don't really care, but the fact of the matter is I actually do it. I don't lie about this. I just actually, as a person, I just don't lie. I find that life is so much easier if you just don't lie. But I'm not just talking out my bum. I genuinely, if I send out good vibes to people frequently, all the time, in fact, so the likes of Nav and Ethan gets them all the time, and by being here you do as well. So like Who Let the Bulls Out, I've sent them out to you in the past. Drew's Tech, I've sent them out to you in the past as well, specifically. Zoner, he's got a bunch of me, so and everybody who tunes in here, they'll get them. Now whether that makes any difference in anybody's life at all whatsoever, I don't really care. I don't, it's besides the point, isn't it? All you can do is try, right? You can try to do something that may or may not have a positive effect. If it doesn't have a positive effect, then I'm not harming anybody, and if I was harming anybody, then I wouldn't do it. But you never know. You never ever know. Maybe some good karma stuff will come from it for all yous. Okay, so there you go. That's it. Right, much love, everybody. I'm tuning out in the next 5 seconds. I've already done the reverse roll call, just saying, yeah, that's oh, Famo, hello from South Africa. Nice South African name there, by the way. Famo, is it Famo or Famo? How do you pronounce it? Hello from South Africa. Yeah, see, look at this, look at the good feeling that we're getting. Mike, I'll be sending some good vibes back your direction, no worries, that's definitely going to happen. And Who Let the Bulls Out, I feel them. That's fantastic that you do. I genuinely do. Like earlier on today, for instance, Who Let the Bulls Out, genuinely today, unprovoked, I was thinking about you. I was thinking about the music on the channel, and I thought to myself, I really hope he's doing well. I hope some positive stuff happens for him. Is it a waste of time? I don't know. Honestly, I don't know, but I keep doing it anyway, right? That's true. Blessings to all of you. Fantastic. Yes. Famo, you made it in the last final seconds. Fan-dabby dozy. What a wonderful day we've had. I hope you all appreciate I hope you all have a, not appreciate, that's the wrong word. Hope you all have a fantastic day and appreciate those around you, and have a lovely day. Take all the positives you can and run with them.